Very good morning. Yesterday we were in which chapter? Agricultural income. You know that agriculture income is exempt from tax in section 10 clause 1. As per section 10 clause 1, agriculture income is exempt from tax. But what is agriculture income? It is defined in section 2 clause 1a, subclause A, subclause B and subclause C. So yesterday we understood what is agriculture income, and then we said that agriculture income would be exempt from tax. Definitely those agriculture income which you understand it as agriculture income, they are definitely agriculture income. Besides that, certain other income which you may not consider to be an agriculture income as per your normal understanding, those are also considered as agriculture income in the definition. In the definition, those are also considered as agricultural income. So we had referred the definition, section 2 clause 1a, subclause A. We also referred subclause B and subclause C. This was given to us as homework. Have you referred to this? Yes? So we will refer this once. Since there are MCQs for 30% of the marks, anything can be asked. So we'll refer to this. Rent for agricultural land received from tenant or subtenant. This I have discussed with you. If you let out your land to another person and he is doing agricultural activities on that, then whatever rent you receive, that is considered as agriculture income as per section 2 clause 1a subclause A. That would be totally exempt from tax. Income from growing flowers and creepers. Income from growing flowers and creepers. So only food grains, growing food grains is not agriculture. Only growing food grains is not agriculture. Growing fruits, vegetables, flowers, all these things would be cash crops, pulses, everything would be considered as agriculture. I'm skipping point number 3 and point number 4 right now. We'll first of all have a small discussion, then we'll move on to these points. Point number 5. Income from sale of replanted trees. Income from sale of replanted trees. See, sometimes a vendor comes to sell the plants. Either he puts a plant in a plastic polythene bag, inside that he puts a sand and he puts a plant and he sells it. Or inside a pot he puts a sand and he puts a plant and he sells it. So he is selling what? He is selling replanted trees. Sale of replanted trees, this will be considered as agriculture income. Even though he is actually not doing any primary activity, whatever plant is there, he is putting into a pot and he is selling it. His income would be considered as agriculture income. Fees collected for allowing cattle to graze on a forest land of spontaneous growth. Spontaneous growth means even if the land is lying idle, it is by nature that grass will grow on that land. So if you allow the cattle to graze on that land, then what will happen? Whatever fees you have collected for allowing the cattle to graze, that fees will be considered as agricultural income. Income of nursery from sale of plants and seedlings grown in pots. So this point is similar to point number 5. So income from nursery will be considered as agriculture income. Point number 8, compensation received from an insurance company due to damage of tea garden from hailstorm. Because of any reason, if there is a damage to your crop and you have taken insurance company is compensating you, then that will be considered as agriculture income. Why so now? Because if there would not have been a damage to the crop and if you have sold the crop, you have realized money, that would have been agriculture income. So any compensation received to compensate the loss in the agriculture income, that compensation should also be considered as a agricultural income. Deva is asking me one doubt, sir. Rent from subtenant is not IFS to tenant. See, Deva, rent from subtenant is definitely IFS, but if I let out agricultural land to you, I am receiving rent from you. My income will be considered as agriculture income. Same agricultural land you sublet to someone else, and he is using for agriculture purpose. Your income will also be considered as agriculture income. So what you are letting out is more important. If you are letting out agricultural land and tenant or subtenant, they are doing agricultural activities on that agricultural land, then your income should be considered as agricultural income. If you are letting out some other land, non-agricultural land, then it has to be IFS. Or you are letting out the property, then it has to be either IFSP or IFS depending upon whether you are owner or you are not the owner. But the moment you let out the agricultural land, your income will be considered as agricultural income and it will be totally exempt from tax. Yes, is that very clear? Okay. One more question Harshit is asking me, is that only for, it's only for tea or it is for all the crops? Answer is it is for all the crops. Here we have taken out the points from some of the case laws. So that is the reason specifically for tea it is mentioned here. In India, more than 90% of the farmers, they do not take the insurance for their crop. In India, crop insurance is not that popular. Farmers do not take the crop insurance. This government has started the crop insurance. Otherwise, very less. In fact, crop insurance was nearly 0% here. So farmers do not take out the crop insurance. But yes, very less farmers were taking out the crop insurance, and one of the case law, there was an argument as to this is the agriculture income or it is a non-agriculture income. Court has given a decision that this is an agriculture income because it is compensated to compensate the loss of agriculture income. Any compensation given for loss, compensating the loss of agriculture income, that compensation should also be considered as agricultural income. So irrespective of whether it is tea garden or any other thing, it can be crop also, it can be anything. So the logic is, compensation is given for what? Is it given for compensating the loss in the agricultural income? If yes, that compensation should also be considered as agricultural income. So it is not only for tea. Now let's move on to right hand side. Left hand side I have skipped the point number 3 and 4. I move on to right hand side. Income from marketing process. Income from marketing process, fisheries, etc. cannot be considered as agriculture income. Fisheries, you don't do any basic operations or primary activities. Marketing is no more. Marketing is not agriculture income. So if you are doing the marketing of agriculture produce, that doesn't mean that your income will be considered as agriculture income. There should be basic operations, there should be subsequent operation. If you do only marketing, then it is only a subsequent operation, not even a subsequent operation. Income from supply of water for irrigation purposes. If you are supplying water to the farmers in a tanker and you are charging money to them, then whatever money you realize will be considered as non-agriculture income. You can't say that I have supplied water and that is used for agriculture purpose, so my income should also be considered as agriculture income. That stand will not be correct. So income from supply of water will be considered as which income? Will be considered as non-agriculture income. Income from mining royalties. See, in the chapter of PGP, I explained you that the state governments would give a contract to companies to do the mining. Whatever coal they are extracting from the coal mines, these companies would sell it in the open market, thereby they realize money, and out of that they would pay some amount of money to the state government in the form of royalty. So that is called as mining royalty. See, mining royalty, definitely you are extracting the natural resources from the earth. that doesn't mean it is agriculture. Agriculture means there should be primary activities, there should be secondary activities, there should be basic operation, there should be subsequent operations, etc. Here you can't say that I am just extracting coal from the land only, so it is a agriculture activity. No, extraction of coal is not agriculture activity. It is a part of industry, extractive industry. So it is non-agriculture income. Income from sale of earth for brick making. Some organizations, they would take that red sand, and that red sand is supplied to someone for brick making. So if I sell the sand for brick making, then my income will not be considered as agriculture income. Even though I am selling the sand, even though I am digging and extracting the sand and I am selling that, my income will not be considered as agriculture income. See, everything connected to land is not agriculture income. There should be basic operations, there should be subsequent operations, then only your income can be considered as agriculture income. Income from stone quarries. Do you understand stone quarries? Stone quarries means in mountain area, etc. They cut the mountains with the help of machines, and they make, in that mountain there might be big stones. So they cut these stones with the help of machines. They make marbles, whatever marble floor tiles that floor tiles, floor tiles, flooring in your house, there is a floor tiles. That floor tiles can be of marble also. So marble is nothing but a stone which might be somewhere in the mountain, etc. So they would cut the mountain, they would cut that land stone part with the help of machine, and they will sell the marbles, etc. So that is not considered as agriculture income, it is non-agriculture income. Income from dairy and poultry farming is non-agriculture income. Growing mulberry leaves and feeding them to silkworms and obtaining silk cocoons will not be treated as agriculture income. Now listen to me carefully. See, growing mulberry leaves and selling the mulberry leaves is an agricultural income. These mulberry leaves are feeded to silkworms. From silkworms, we get silk cocoons, and those silk cocoons are taken to the factory. It is processed, and silk cloth is made. So if you just grow the mulberry leaves and you sell the mulberry leaves only, then your income will be purely agriculture income. But if you grow the mulberry leaves, you feed that mulberry leaves to silkworm to get the silk cocoons, then your income would be considered as non-agricultural income. So growing mulberry leaves and feeding them to silkworms and obtaining silk cocoons, this will be considered as non-agriculture income. Sale of spontaneously growth forest trees. See, in forest, if you go and cut the trees and you sell the wood, then that cannot be considered as agriculture income. Why? Because you did not do any primary activities. If you yourself might have grown that tree and now you are cutting it and selling, then it can be considered as agriculture income. But you go to the jungle and you cut the tree and you sell the wood, in that case it cannot be considered as agriculture income because you have not performed any primary activity. So sale of spontaneously grown forest trees would be considered as non-agriculture income. I am skipping point number 9 right now. That point number 9 I will connect with point number 3 and point number 4 of agriculture income. Point 10 says interest on arrears of rent payable in respect of agriculture income. Interest on arrears of rent payable in respect to agriculture income. Let me explain. Say for example, I am letting out my agricultural land to Manoj. I have let out my agricultural land to Manoj, and the agreement is whatever crop he is having, by doing the agriculture activity, whatever crop he gets, whatever produce he gets, 60% of the produce he will give it to me, and 40% produce he will keep it with him. So he is paying me rent in kind. He is paying me rent in kind. Say for example, he has delayed the payment of rent. He has delayed the payment of rent. There are two possibilities. Possibility one, I have let out my agricultural land to him. He is paying me rent in monetary terms. He is giving me money. Second possibility, he is giving me share of the produce. Whatever he is giving me, there should be some due date. By this date, he should give. Generally, when the rent is paid in monetary terms, there will be a due date. That at the end of every month, on this date, you should pay the rent. Now, say for example, he has delayed the payment of rent. Since he has delayed the payment of rent, that rent can be called as rent in arrears. That rent will be called as rent in arrears. On that arrears, since the amount is outstanding, since the amount is paid late, I will charge interest. For example, I have let out my agricultural land to Manoj, saying that you use this for agriculture purpose and you pay me rent of 20,000 per month. So Manoj is paying me rent of 20,000 per month. This 20,000 will be considered as agriculture income for me. But if he is paying rent late, we had agreed a date of say last day of every month he has to pay me rent. Now for a particular month, he paid the rent, but he paid late by 2 months. So for that 2 months time span, I would charge interest. Instead of interest, I took some produce from him. I took say 200 kgs of rice instead of charging interest. Then the 200 kgs of rice will be considered as non-agriculture income. Interest on what? Arrears of rent payable in respect of agriculture income. Whether you receive it in monetary terms or non-monetary terms, the nature of income would remain the same. So if there is an outstanding rent, you charge interest on that. That interest will be considered as non-agriculture income, whether you receive it in monetary terms or whether you receive it in non-monetary terms. Income from sale of salt produced by flooding of land with seawater. You know, na? There will be land area. On that land area, we will be putting water, salted water, and that land will be flooded with a salted water, and from that we will get a salt. So that activity is not considered as agriculture income, it is purely non-agriculture income. Point number 12 also I am skipping right now. I move on to point number 13. What it says, interest received by the money lender in the form of agricultural produce. If you have taken a loan from money lender, you are supposed to pay him interest. You could not pay him interest. So he took say 200 kg of rice or 200 kg of wheat from you. Will that make it an agriculture income? Answer is no. Because if you have paid him interest in monetary terms, that would have been non-agriculture income. So even if you pay it in non-monetary terms, the nature of income would remain the same. It would be considered as non-agricultural income. Transfer of urban land is considered as non-agriculture income. See, this will discuss in the chapter of capital gain. But for the timing, you can understand it as when you sell the agricultural land and you make profit on sale of land, that is not agriculture income, that we have already discussed yesterday. If you are having agricultural land, if you sell the agricultural land and thereby you make profit on sale of agricultural land, then that will not be considered as agricultural income. Let's move on to last point, that is point number 15. Rental income from farmhouse given for non-agricultural purpose is non-agriculture income. If I give land along with house on a rental basis and the other person is using that land for agricultural purpose and he is using that house for storing some agriculture equipment, etc., then my income from rental income from land as well as rental income from farmhouse, both will be considered as agriculture income. Income from farmland and income from farm building, both would be considered as agriculture income, provided that other person to whom I have let out the land, he is doing agriculture activities on that, and that farmhouse, that farm building, he is using as a dwelling house, storehouse, etc. But say for example, I have let out the bungalow along with the land, and the other person is not using for agricultural operations. He is using for non-agricultural activities. In that case, definitely whatever rent I receive should be considered as non-agricultural income. Income from building should be taxed under IFHP. If it is income only from plot of land, it should be taxed under IFOS. Yes, we have covered most of the points. 4 points are left. Now listen to me carefully. Situation 1. There is a partner, there is a firm. Partner might have provided capital to the firm, and partner might also render some services to the firm. What firm would pay for this? For capital, firm may pay interest on capital, or if loan is provided, firm may pay interest on loan. Number 2, for the services rendered, firm may pay remuneration, bonus, etc. Number 3, firm will give share in the profits. Whatever profits firm has earned, out of that, tax will be paid, and thereafter, share of profit will be given to the partner. Now, this share of profit is exempt under section 10 clause 2a in the hands of partner. Why it is exempt? Because on that firm has already paid the tax. We learned in the chapter of PGP that interest, remuneration, etc. paid by the firm to the partner. This interest remuneration is an expense for the firm and income for the partner. Now the point is, this income, should it be considered as agriculture income or should it be considered as non-agriculture income? So here we say that nature of income in the hands of partner would be same as nature of income in the hands of firm. See, partners are actively engaged in the business of firm. So whatever is the nature of income in the hands of the firm, same would remain the nature of income in the hands of partner. For example, firm's income is agriculture income. Out of that, interest on capital, interest on loan, remuneration, etc. is paid to the partner. Then partner's income will also be considered as agriculture income only. If firm's income is agriculture income, partner's income will also be treated as agriculture income. And if firm is earning income from non-agriculture activities, then out of that, any interest paid or any remuneration paid to the partner, for partner also, that will be considered as non-agricultural income only. In other words, nature of income in the hands of the partner would be same as the nature of income in the hands of the firm. If firm's income is agriculture income, partner's income will also be considered as agriculture income. If firm's income is non-agriculture income, partner's income will also be considered as non-agriculture income. Yes, is that very, very clear? Yes or no? Shall I proceed further? Okay. Let's move on to situation 2. Here in situation 2, we have a shareholder. We have a shareholder and we have company. Shareholder has provided funds to the company. In turn, company has issued the shares. Or we can say shareholder has provided capital to the company and company has issued the shares. Now, company is engaged in agricultural activities. Therefore, company's income is agriculture income. Company is engaged in agriculture activity. So, company's income is agricultural income. Now, my point is, company has earned profits. Company has earned profit. There is something called as profit before tax. Profit before tax. On that you pay the tax. Then you get profit after tax. Some portion of this profit after tax is given to shareholders in the form of dividend. It is given to shareholders in the form of dividend. Now question is, this dividend income which is there in the hands of shareholder, dividend income in the hands of shareholder, should it be considered as agriculture income or should it be considered as non-agriculture income? That is the question. Just in the previous situation I told you, nature of income in the hands of the partner would be same as the nature of income in the hands of the firm. So if firm's income is agriculture income, partner's income will be treated as agriculture income. If firm's income is non-agriculture income, partner's income will also be treated as non-agriculture income. Here what will happen? Can we say that nature of income in the hands of shareholder would be same as the nature of income in the hands of the company? Answer is no. Why so? Because company generally is considered as a separate entity and shareholder does not participate in the management. And whenever shareholder is investing money in the shares of the company, he might not be interested in the business of the company. He might be interested in doing investment and earning dividend and earning capital appreciation. If there is an increase in the price of shares, he may earn capital appreciation. So, moral of the story is, shareholder is considering this as an investment avenue. He is not keen to invest only in those companies which are engaged in agriculture operations. He will be ready to invest in any company wherever he gets good return on his investment. So, when a shareholder, when a person is investing in shares, his intention is to maximize his return on his investment, get more dividends, ensure that he invests in a company wherein there is a increase in the price of shares, so there is a capital appreciation. So when a shareholder is investing in the shares of a company, he is not interested actually in the business of the company, he is interested to get good return on his investment. Therefore, we cannot say that the nature of income in the hands of the shareholder would be same as that of nature of income in the hands of the company. So, irrespective of whether the company is having agriculture income or company is having non-agriculture income of shareholder will always be considered as non-agriculture income. So, this dividend income is always considered as which income? This will be considered as non-agricultural income. Non-agriculture income. Yes, is that very, very clear? Yes or no? Okay. Now let's move on to the last situation, point 3. Point 3 or situation 3. Say for example, there is a company. In that company, there are people working at the top position, maybe directors of the company. Directors of the company would get remuneration. Remuneration for what? For managing the affairs of the company, guiding the company, etc. Question is, directors remuneration received from company, should it be considered as agriculture income or should it be considered as non-agriculture income? Yes. If you are considering shareholders dividend as non-agriculture income, definitely directors remuneration should also be considered as non-agriculture income. Now you may argue saying that no, director is engaged in day-to-day activities, director is interested in the business of the company. No, director is not interested in the business of the company. He is interested in rendering the services and earning director's remuneration. See, if director's remuneration is exempt or it is considered as agriculture income, if the company is engaged in agriculture activities, then every person would like to become director only in those companies who are into agricultural operations. We cannot differentiate or we cannot discriminate between two companies, saying that this company is engaged in agricultural operations, so directors remuneration received by directors of this company would be exempt, and another company is engaged in non-agriculture activities, so remuneration received by director from those companies would be considered as non-agriculture income and it will be taxed. That cannot be done. We cannot do discrimination here. Otherwise, everyone will look for an opportunity to work as a director in which company? The companies who are engaged in agriculture activities. So, moral of the story is, director remuneration is always considered as non-agricultural income. It is always considered as non-agricultural income. Yes, is that very, very clear? Okay. Now let's move on to this page once again, page 165. Whatever points we had left, let's go through that. Left hand side, point number 3. Interest received by partner on his capital from the firm which is engaged in agricultural operations. If the firm is engaged in agricultural operations, partners interest on capital, interest on loan, remuneration, everything received by the partner would be considered as agricultural income. Point 4, share of profit or salary received by partner from the firm engaged in agricultural operations. Friends, I told you that share of profit is anyway exempt from tax, because on that profit, if at all that profit is taxable, firm would definitely pay the tax. If the income of the firm is taxable, firm is supposed to pay the tax, not the partner. Share of profit is totally exempt in the hands of the partner anyway. So remuneration received by the partner, salary, bonus, commission, etc. received by the partner from the firm would be considered as agriculture income if the firm is engaged in agricultural activities. So point number 3, point number 4 both are done. Now we move on to the right hand side. Point number 9 says dividend paid by a company out of agriculture income. Dividend paid by a company out of agricultural income would be treated as non-agriculture income. The dividend will be considered as non-agriculture income. Last point, that is point number 12. Remuneration of fixed percentage of net profit received by the managing agent from the company, and the company is engaged in earning agriculture income. Remuneration received by manager or the director would always be considered as non-agricultural income. Yes, is that very clear? We have referred to these examples. We have given sufficient time. Now let's move on to next part, that is composite income. Yesterday I was discussing composite income with you. So we had to wind up the session because it was 2 o'clock. Now I'll help you to recollect what is composite income. For example, I am growing wheat and I am selling the wheat. Then my income is purely agricultural income. I gave you three examples yesterday saying that Manoj is growing wheat and selling wheat. Then his income is agriculture income. This was the first example. Second example is I am purchasing wheat from Manoj. I am taking that wheat in my factory. I am making a wheat flour out of it and I am packing a wheat flour in 5 kg bags and I am selling it. So my income will be considered as non-agriculture income because I am not engaged in any agricultural operations. Third possibility is Manoj is growing wheat. He is taking that wheat to his own factory. He is making wheat flour and he is selling the wheat flour. Manoj is taking wheat from his own farmland to his own factory. So he has not purchased the wheat, he has grown the wheat. On his own farmland, he has grown the wheat. That wheat which is grown is taken by him to his own factory. It is processed and wheat flour is sold. In that case, we say that Manoj's income is a combination of agricultural and non-agricultural income. Such income is called as composite income. Such income is called as composite income. This composite income is a combination of agriculture and non-agriculture income. So what we need to do, we need to bifurcate the portion of agri income and non-agri income. Non-agri income cannot be taxed. Sorry, agri income cannot be taxed. Only non-agri portion of the composite income can be taxed. So we have to segregate agriculture income and non-agriculture income. Agricultural income should be exempted, it should not be taxed, and non-agriculture income should be taxed. So how to do the bifurcation? That is what we need to understand. Why is third situation not considered as basic operation, subsequent operation, and is fully agriculture income? Aditi madam, see, if you are growing something and selling that produce, if you are engaged in only growing, then your income can be considered as 100% agriculture. Another possibility is you are not engaged in growing, you are just manufacturing, then your income is 100% non-agricultural. And lastly, if you are engaged in growing as well as manufacturing, then definitely your income is a combination of both. Na? For example, you are growing wheat and you are selling the wheat. Which income it is? Agriculture income. Because you are engaged in basic operations as well as subsequent operations. You are doing primary activities as well as secondary activities. Now you are selling this wheat to a giant company called as Britannia. And Britannia is manufacturing biscuit out of it. So they are grinding the wheat, they are making the wheat flour, out of wheat flour they are making the biscuits and they are selling the biscuits. Then income of Britannia is 100% non-agricultural income. Now let us take the last situation, third situation. In third situation, you are growing wheat. You are growing wheat. That wheat you are taking to your own factory, you are making wheat flour, you are making biscuits and you are selling biscuits. You are not selling wheat, you are selling biscuits. So in the previous two example 1 you were engaged only in growing of wheat and selling of wheat. That was agriculture income. Second example, you were Britannia companies engaged in purchasing wheat, making biscuits and selling biscuits. That is purely non-agriculture income because that doesn't involve any primary activities, secondary activities. Third situation, we say it is a combination of first and second situation. If the first income is agri and the second example income is non-agri, if you make the total or if you combine the activities, that cannot make that as agriculture income. So our income should be considered as partly agri and partly non-agri only. Whatever portion of the income is earned out of primary and secondary activities should be considered as agri. Whatever portion of the composite income is earned out of manufacturing processes should be considered as non-agri. This is the most logical thing. Yes or no? Aditi madam, have you understood? Okay. Now, for three commodities, government has done the study and they have come out with rules, and in that rules they have prescribed some percentage, saying that if you are engaged in growing as well as manufacturing both, then what portion of your total income should be considered as agri and what portion of your total income should be considered as non-agri. What portion of the total income should be considered as agri and what portion should be considered as non-agri. Government has studied the agricultural activities and manufacturing processes, and they have decided some percentage, and that percentage is given in different rules. So based on those rules, we have to segregate the total income into agri and non-agri. Agri will be exempted from tax, non-agri would be made taxable. Shruti is asking me question, sir, then isn't grinding of wheat to get flour considered to be secondary activity according to example? No madam, secondary activity will not involve grinding. Why na? Because secondary activity involves what? Secondary activity starts when the produce sprouts out of the land, and till you make the produce fit to be taken to the market. Wheat which you get from the land, on that wheat there is a brown cover called as husk. If you remove that husk by putting the wheat in the machine, it will segregate the husk and it will segregate the wheat. That is a secondary activity, because if you don't do, then the wheat is not fit to be taken to the market. In the market, wheat with husk is not sold. What is sold is only wheat. You have to remove the husk. So you have to make the produce fit to be taken to the market. If your produce is fit to be taken to the market, then your secondary activity will come to an end. I had given you examples in that secondary activity. See, what is secondary activity? Subsequent operations of secondary activity would constitute weeding, digging. I give you example, a potato will grow inside the land. So you have to dig the land slightly to get the potato. So you will take out the potato. Thereafter what you will do? You will dig the soil. You will get the potato. Thereafter you will remove the undergrowths, that is roots which are attached to potato. You will cut that roots. Why? If you don't cut that root and you take the potato to the market, no one is going to purchase it. Your produce is not fit to be taken to the market. Pruning, cutting, harvesting and rendering the produce fit to be taken to the market. These activities are considered as subsequent operations. Grinding is a non-agriculture activity. You are processing the agriculture produce. If you think in this manner, then say for example, you know the sunflower oil. The edible oil which you get are of different variety. Nowadays you get rice bran oil, you get sunflower oil, you get soybean oil. So say for example, you are growing soybean or you are growing sunflower. You take that sunflower to your factory, you are doing some processing on that and you are generating oil. Should that be considered as agriculture income? Should that be considered as subsequent operations? No, you are changing the form of a product entirely. Earlier it was a sunflower, now it is a sunflower oil. Earlier it was a soybean, now it is a soybean oil. In this entire process, there is no primary activity, no secondary activity. Secondary activity means till you make your agriculture produce fit to be taken to the market. Thereafter, if you use that agriculture produce for processing, etc., that would be considered as purely non-agriculture income. It cannot be said that you are engaged in agriculture activities. Is that very clear, Shruti madam? So, any activity employed on agriculture produce, any activity employed on the produce to process it and change its form, then it is purely non-agriculture income. It should not be considered as subsequent operations. Say for example, there is a machine, you are putting wheat and you are getting flour. Wheat is a separate product. Flour is a separate product. Both are sold in the market and they are identified separately. When you go to a shop, if you want wheat, if you demand wheat, that other person is not going to give you flour. Or if you are demanding flour, that other person is not going to give you wheat. Wheat and flour both are having a separate commercial identity. So, when you use the wheat, grind it, and you get the flour, these both products are separately identifiable commercially. So, you are changing the form of your product. Your agriculture produce, the form itself is changed. This cannot be considered as subsequent operations. Subsequent operation means you are making the produce fit to be taken to the market. You are not changing the form of a produce. Wheat remains the wheat only. If you remove the husk, wheat will not lose its identity. So when a product loses its identity, it cannot be considered as subsequent operations. When the product is having its identity intact, if there is a potato and roots are attached to that, if you cut the roots, potato will not lose its identity. But if you take the potato to the factory and you cut it into slices and you make the potato chips, then it is losing its identity. So whatever activities are carried out in factory cannot be considered as a subsequent operations, because earlier it was a commercially totally different product, potato. Now it is potato chips. The price is different. People are identifying it differently. So everything is different. Yes, is that very clear? Shall I proceed? You understood now? Okay. Let's move on to this composite income now. So composite income means what? You are taking the agriculture produced to your factory, and in that factory you are changing the form of a product. Identity of the product is changed. So you are engaged in purely non-agricultural activities, and you have also grown that product. Wheat is grown, then the wheat is taken to the factory. From that wheat you have made the wheat flour. From that wheat flour you are making the biscuits, and you are only selling the biscuits, you are not selling the wheat. If you grow the wheat and sell the wheat, agriculture income. If you purchase the wheat, convert it into flour, make the biscuits and sell the biscuits, purely non-agriculture income. But if you combine all these activities are done by one and the same person, then definitely your income should be partly agriculture income and partly non-agriculture income. So question is, how much should be agriculture income and how much should be non-agriculture income? This combined income is called as composite income. It is a combination of agri and non-agri. We have to segregate the agri and non-agri, because agri is exempt and non-agri is taxable. So how much portion of the composite income would be considered as agriculture income and how much portion of composite income would be considered as non-agriculture income? That is what we need to understand. So for different products, different rules are prescribed. So point number 1 says, if you are growing and manufacturing, between growing and between two words, growing, manufacturing, I have written and, means you are engaged in growing as well as manufacturing. If you are engaged only in growing, your income is agriculture income. If you are engaged only in manufacturing, your income is purely non-agriculture income. But if you are engaged in growing as well as manufacturing, then your income is partly agriculture income, partly non-agriculture income. Growing and manufacturing tea. You are engaged in growing and manufacturing tea. Then as per rule 8, 60% income will be treated as agriculture income. Remaining 40% will be treated as non-agriculture income. So you have to take the composite income. You have to bifurcate that into two parts, 60% and 40%. 60% income would be considered as agriculture income. It would not be taxed. It would be exempt from tax. 40% income will be considered as non-agriculture income. It will be taxed. Non-agriculture income is definitely part of your business income. So it will be taxed under that PGBP. We move on to point number 2. Sale of centrifuged latex or Sinex. See, these are the technical jargon, these are technical terms. Don't ask me the meaning. Centrifuged latex means it is nothing but a quality of rubber. It is a quality of rubber. See, the rubber which you use when you write with pencil and you have to rub something, the quality of that rubber is different as compared to the rubber of the tires of the car. So every rubber is different, every quality of rubber is different, and every quality is having its own identity and name. So we are, if you are engaged in sale of centrifuged latex, latex is a quality of rubber. Centrifuged latex or Sinex, this is also quality of rubber. You can understand it as rubber, you need not remember these technical jargons. You are engaged in sale of centrifuged latex or Sinex, that is rubber, manufactured from rubber plants, grown by seller in India. So if you are growing rubber plants means you will get some liquid from that plant. It will be a sticky kind of thing. Then you take it to the factory, you process it and make the rubber out of it. So in that case, your income would be considered as partly agricultural, partly non-agricultural. As per rule 7A, 65% of the income will be considered as agriculture income. Remaining 35% income will be considered as non-agriculture income. So in case of tea, the ratio of agri to non-agri is 60-40. In case of rubber, it is 65-35. Third point is, you are engaged in growing and curing coffee in India. Growing and curing coffee in India. Growing is an agricultural activity, curing is a non-agricultural activity. So you are engaged in growing as well as curing in India of coffee. Then as per rule 7B sub rule 1, rule 7B sub rule 1, 75% of the income will be considered as agriculture income, 25% income will be considered as non-agriculture income. So these three things you can remember: tea, rubber, coffee. Tea, rubber, coffee. You remember TRC, tea, rubber, coffee. How much is the agri income? 60, 65, 70. Sorry, 60, 65, 75. First there is an increase by 5%, then there is an increase by 10%. So from you start with 60%, increase it by 5%, that is 65, then you increase it by 10%, that is 75. So you just remember the agri percentage, automatically you will get the non-agri percentage. So in case of tea, agri is 60, in case of rubber, agri is 65, in case of coffee, agri is 75. Curing means you can understand curing word as processing. You can understand curing word as processing. See, you get the coffee beans now. From the plant, you will get a coffee bean. That coffee beans are required to be taken to the factory and they are required to be cured. So there will be a curing activity. That is nothing but a processing activity. So that will be considered as non-agriculture income. Curing means processing kind of thing. Let's move on to point 4. Now once again you will ask me, sir, what is grounding? There are a lot of things here, technical things. Growing, curing, roasting. You roast the papad. Do you understand papad? You roast the papad. Similarly, coffee beans are also roasted. If you roast, then the quality you can have. If you roast when you grind, the grinding process will be very much efficient. So roasting is important. So if you are engaged in growing, curing, roasting and grounding coffee in India with or without mixing of chicory or other flavoring ingredients. See, if you go to say cafe coffee shop, there you get 10 different varieties of coffee. You get 10 different varieties of coffee. I am not aware about all of them. You get cappuccino, you get 10 different varieties of coffee. But when you get the coffee beans, You don't have a separate coffee beans saying that this is a cappuccino beans. It is coffee beans only. So you get the coffee beans. On that you apply different non-agricultural processes, and you bifurcate that coffee beans. You bifurcate the coffee into 10 different variety. Some of them are very strong, some of them are light coffee. So you can have 10 different variety of coffee, but the coffee bean is coffee bean is same. So whatever activities you do after getting the coffee beans, whatever processes you apply to get the 10 different types of coffees, those are non-agricultural operations performed on a coffee. Now the point is, as and when the non-agricultural operations would increase, your non-agricultural income should also increase. So if examiner says growing, curing, then you should get into point number 3. Along with growing, curing, he has written roasting as well as grounding. Then you should get into point number 4, and in point number 4 the percentage are same as T. They are same as T. Rule 7b sub rule 1a will be applicable. Agriculture income will be 60%, non-agriculture income will be 40%. Is that very clear? Yes, have you understood this very clearly? You have to just remember, tea, rubber, coffee, agri income is 60%, 65%, 75%. If coffee is grown, cured, grounded, roasted, then 60% is agriculture income. That's all. You remember this much. Now you may think, sir, you had given the example of wheat, converting wheat into wheat flour, converting wheat flour into biscuit. Or what? One more thing can come to your mind. Say, for example, you are growing sugar canes and you are selling the sugar canes in the market. Or maybe sugar canes you are taking to your own factory. From that, you are processing the sugar cane and making the sugar, and you are selling the sugar. That is also a composite income. You are growing wheat and you are selling the biscuits. That is also a composite income. You are growing wheat and you are selling the chapatis in a semi-finished form. That is also a composite income. So you can have composite income in lot of commodities. In most of the agriculture commodities, you can have composite income. But government has not made separate rules for each and every commodity. Then we'll have n number of rules. So what government has done now? For tea, coffee and rubber, they have prescribed the percentages, they have prescribed the rules, because in India, in tea, coffee and rubber business, there are big giant companies engaged. In tea, coffee and rubber business, there are listed and limited companies who are doing these activities on a very large scale. But Britannia is not doing farming. Britannia is just purchasing wheat from a farmer and they are converting into biscuit and selling it. Or sugar manufacturing company is actually not engaged in growing sugar. They are just purchasing sugar cane from the farmer. They are processing it. They are selling the sugar cane. They are selling the sugar. So in India, tea, coffee and rubber, companies are engaged in growing as well as manufacturing processes. Therefore, government has made separate rules for them. But other than tea, coffee and rubber, government has made a general rule, that is rule number 7. That is rule number 7. Now I'll give you an example to make you understand what rule number 7 says. Say for example, you are growing wheat. What expenditure would you incur? Number 1, you will purchase seeds. Say for example, you have incurred an expenditure of 50,000 on seeds. Now on your farmland, laborer will work, so you will pay him labor charges. A person who is working on a farmland, you pay him labor charges. Say for example, 1,50,000. You have purchased some water and you paid the electricity bill. say 50,000. What is the total? 2 lakh 50. Or let me add one more point. Other expenses. Other expenses for purchase of pesticides, etc. That is also 50,000. Now you take the total, you get 3 lakh rupees. Now say for example, you are growing wheat, and for growing wheat, you incurred a total cost of 3 lakhs. Now we have got the wheat. Now we have got the wheat. If you go and sell this wheat in the market, then the fair market value of this wheat is say 7 lakh rupees. Fair market value of this wheat is how much? If you go and sell it in the market, then the fair market value of this wheat is 7 lakh rupees. How much cost you had incurred for growing it? 3 lakhs. If you sell it in the market, you realize 7 lakhs. So what is your profit element here? 4 lakhs. That is which income? That is agriculture income. That is agriculture income. Is that very, very clear till now? Yes or no? So you have incurred a cost of 3 lakhs and you have grown the wheat. If you sell that wheat in the market, then you can realize 7 lakh rupees. If you sell, then we say that 7 lakh minus the cost 3 lakhs, that 4 lakh is your agriculture income. But now say for example, you are not selling the wheat. You are taking your wheat to your own factory. From that wheat you are making wheat flour. From that wheat flour you are making biscuits and you are selling the biscuits. So you have sold the biscuits. Now in factory you might incur a lot of expenditure, like for example factory rent. You might have paid wages to your workers, or factory electricity bill, gas, lighting, heating, etc. Lot of expenditure. Other manufacturing expenses. Say for example, factory rent is 2 lakh rupees. Wages is 2 lakhs. Factory electricity is say 50,000. Other expenses are 50,000. All these expenses, 5 lakhs, they are incurred for doing non-agricultural activity, for processing the wheat and making the biscuit out of it. Now say for example, you are selling the biscuit in the market. So sale of biscuit. Sale of biscuit. When you sell the biscuit, say for example, you have realized 25 lakhs by selling the biscuit. You have realized, or say 20 lakhs, you have realized 20 lakhs by sale of biscuit. Then this is what? This 20 lakhs is which income? Is it an agriculture income or is it a non-agriculture income? No, this is neither agriculture, non-agriculture, neither agricultural income nor non-agriculture income. It is a combination of both. It is a combination of both. So this is a composite income. So I say that sale of biscuit, it is a composite income. My job is to bifurcate this composite income into two parts, agri and non-agri. And I do not have the separate percentages for biscuit manufacturing, etc. I have it separately for tea, rubber and coffee. So for this biscuit I have to apply rule 7. Rule 7 says what? Rule 7 says you bifurcate your composite income into two parts. Number one, agricultural income, and number two, non-agricultural income. For doing this bifurcation, how much you should take it to agriculture income? So rule 7 says fair market value of produce taken to factory and used as raw material. Fair market value of produce taken to factory and used as raw material. That amount should be bifurcated into agricultural. Can you tell me what is the fair market value of produce taken to the factory and used as raw material? Yes. In this example, what is the fair market value of produce taken to the factory and used as raw material? 7 lakh rupees. So I need to segregate 7 lakh. That 7 lakh would be taken to agri income. What is balance left? 20 lakhs minus 7 lakhs. That is 13 lakhs. Now these are gross incomes. These are gross incomes. Let me write smaller in smaller fonts. Rule 7. Fair market value of produce taken to factory and used as raw material. Used as raw material. That is 7 lakhs. This 7 lakh is considered as gross income. This is considered as what? Gross income. Here also right hand side, this 13 lakhs should also be considered as gross income. Gross income means without deducting any expenses. See, by sale of biscuit, whatever money is realized, that is a gross income. If I sell the biscuit, I realize 20 lakhs. That is gross income without deducting any expenses. So this gross income of 20 lakhs, I have bifurcated into agri and non-agri. Agri is 7 lakh, non-agri is 13 lakhs. But don't consider this 13 lakh to be my non-agriculture income. This is my gross non-agriculture income. From that, I have to deduct the expenses. Can you tell me what are my non-agricultural expenses? This one, 5 lakhs. This 5 lakhs should be deducted here. So now I get what? 8 lakhs. This is my non-agri income. Net non-agri income. Similarly, what are my agri-related expenses? 3 lakhs. 3 lakhs. So I will deduct expenses here, 3 lakhs. So what do I arrive? I arrive at the amount of net agri income. How much it is? 4 lakhs. Yes. Have you understood this very clearly? Yes or no? So when these rules are required to be applied, rule 7 is required to be applied in which case? When it is a commodity or product other than tea, coffee and rubber. If you have tea, rubber, coffee, etc., tea, rubber, coffee, then you have a separate rules. Percentages are prescribed. then this rule 7 should not be applied, because this rule 7 is a general rule. Rule 7 is a general rule. It is applicable when the commodities other than tea, rubber and coffee. Commodities other than tea, rubber and coffee. In our example, I took an example of sale of biscuit. So it is neither tea nor rubber nor coffee. In that case, you apply rule 7. Have you understood this very clearly? So in your textbook, I move on to page number 166. Read this, what it says. For disintegrating composite income, disintegrate means to segregate, bifurcate. For disintegrating composite business income, which is partly agriculture and partly non-agriculture, the fair market value of any agriculture produce raised by the SSE or received by him as rent in kind and utilized by him as raw material in his business should be deducted. From composite income. You deduct the amount of fair market value of produce used in the factory as raw material. The balance would be considered as gross non-agri income. No further deductions is permissible in respect of expenditure incurred by the SSE as a cultivator or a receiver of rent in kind. So this composite income, you have the composite income. From that you deduct what? Fair market value of agriculture produce raised by the SSE and used in the factory as raw material. The moment you deduct this, the balance is non-agriculture income. But mind you, this non-agriculture income is gross income. This is gross income. From that you have to deduct non-agriculture expenses to derive the amount of net non-agriculture income. Net non-agriculture income. Yes, have you understood this very clearly? Yes. Manoj is there, Manoj? Mr. Manoj, are you there? Absent? How he can be absent? Even if he is not interested, he should come na, at least. Because we are going to take his examples only. I am taking an example. Here. Say for example, me and Manoj both are working as a faculty in inside commerce studies. And we are delivering the lectures and we are getting fees. So, and we are working as an employee. We are not working as an independent professional. We both are working as a faculty with inside commerce studies on a full-time basis. We are getting the remuneration. That is which income? Agri income or non-agri income? Definitely non-agri income. Even if you teach the chapter of agricultural income, your income would be considered as non-agriculture income only. So, our non-agricultural income non-agriculture income, my non-agri income is 5 lakhs. Manoj's non-agri income is also 5 lakhs. Once the batch is over, one batch is over, then there will be some gap of say 15 days, 1 month or so. And then once again the next batch would start. During that gap, I would do 2 things. Number 1, take rest, prepare for the next batch, make the excellent quality of notes, etc. But Manoj is teaching accountancy. Accountancy, every year you need not change the notes. They are going to remain the same. So in that gap now, when one batch ends and the second batch starts, in that gap, Manoj goes to his native place and there he is engaged in agricultural activities. So I am not having any agri income, but Manoj is having an agriculture income of 5 lakhs. So my income, I have earned 5 lakhs, but Manoj has earned 10 lakhs. Kritika madam is asking me, in that example, agri income would be 7 lakhs. 7 lakh is included in non-agri income of 20 lakhs? Yes. Madam, 20 lakhs is not a non-agri income. Please don't consider 20 lakhs as non-agri income. 20 lakhs is not non-agri income. 20 lakhs is a composite income. If you say that whether 7 lakh of agri income is included in non-agri income of 20 lakh, that statement would be incorrect. Because 20 lakhs is not non-agri income. It is a composite income. Please understand, composite income means combination of both. So 20 lakhs is a combination of both. So to aggregate, segregate into agri and non-agri. Kritika madam, have you understood? Yes or no? Okay. Now I am back on my example. See, our discussion with respect to composite income is over. Our discussion with respect to composite income is over. How to segregate or bifurcate the composite income into agri and non-agri is over. The topic is completed. Now I want to something else. What it is, I will not let you know right now. I have just taken an example here. So my income, my non-agriculture income is 5 lakhs. I do not have any agriculture income. Manoj's non-agri income is 5 lakh and his agri income is also 5 lakhs. Now my question to you is, what would be my tax liability? For the time being, forget about rebate. Say for example, we both are non-resident individual. So we both are not eligible for any rebate under section 87A. So forget about the rebate for the time being. You just tell me what will be my tax liability. Forget about the surcharge, forget about the health and education cess. You just give me the basic tax. What will be my basic tax liability? Up to 2,50,000 there is no tax, it is basic exemption limit. From 2,50,000 to 5 lakh it is 5%, that is 12,500. And what about Manoj's tax liability? Manoj's tax liability 1,12,500. Oh, 1,12,500. So according to you, that agriculture income is taxable. Padmesh, Akshaya, if Manoj's tax liability is 1,12,500, then according to you, do you believe that agriculture income is taxable? No, na? So, you will say that tax liability is 12,500 only? Yes or no? Now the point is, don't you feel Manoj has earned more amount of income? He is capable of paying more tax. He has earned more amount of income as compared to me. Na? He is capable of paying more tax. But he is paying same amount of tax as me. I have earned 5 lakhs. I am paying a tax of 12,500. Manoj has earned 10 lakhs. He is also paying tax of 12,500. So it is a gross injustice to me. So I said to the government, if you are charging Manoj, if you are charging tax of 12,500 to Manoj on income of 10 lakh rupees, why you are charging me the same amount? Either you reduce my tax liability or you increase Manoj's tax liability. Na? The same level of income, same tax is acceptable. The different level of income, different level of earning, the same tax liability, how it can be acceptable? So officer says, no, that agriculture income is exempt from tax. No. Agriculture income is exempt from tax, that I understand. Forget about the Income Tax Act now. Forget about the Income Tax Act. Look at the situation of two individuals. One individual earning an income of 10 lakh paying a tax of 12,500. Another individual earning only 5 lakh, he is also paying a tax of 12,500. So it is a gross injustice to that person who is earning 5 lakh and paying a tax of 12,500. It is a gross injustice to me. Are you understanding? A person who is capable of paying more is also paying less. Therefore, government came out with an idea to levy more tax to Manoj. Government came out with an idea to levy more tax to Manoj. For that, government came out with a concept of partial integration. Partial integration. So there is a concept of partial integration. If the concept of partial integration is applicable, then the tax liability calculation mechanism is totally different. See, government doesn't have right to levy tax on agriculture income. Government doesn't have right to levy tax on agriculture income because Constitution of India, Schedule number 7, Union List entry number 82 says, central government has a right to make law for charging tax on any income other than agriculture income. So anyway, central government doesn't have the right to levy tax on agriculture income. So that section 10 clause 1 which is made, that is also of no use because anyway, even if it is an agriculture income, they don't have the right to levy the tax. But here, even though they don't have the right to levy the tax, they have indirectly levied more tax in the hands of that person who is having a higher income, who is having an agri income as well as non-agri income. Let us try to understand this. What I am discussing with you? Partial integration scheme for calculation of tax liability. When partial integration scheme will be applicable? First of all, to whom it will be applicable? Partial integration scheme for calculation of tax liability will be applicable only in case of those people whose income is taxable at slab rate. Partial integration scheme for calculation of tax liability is applicable only in the hands of those people whose income is taxable at slab rate. Can you tell me whose income is taxable at slab rate? Individual, HUF, association of person, body of individual and artificial juridical person. From the definition of person, these people's income would be taxable at slab rate. These people's income would be taxable at slab rate. They would form part of that first category, na basic concept chapter first category. So partial integration scheme would be made applicable only to these people whose income is taxable at slab rate. Now for applying partial integration scheme, what is the job of partial integration scheme? Partial integration. What do you mean by integration? Integration means to combine, integrate, make it one. So in partial integration scheme, you are integrating your two incomes. You are integrating means adding your non-agriculture income to the agricultural income and making it one. You are adding your non-agricultural income to agriculture income and you are making it one. That is called as integration. So you will have to integrate your agriculture income to the non-agriculture income to calculate the tax liability as per the partial integration scheme. Now, partial integration scheme. Cooperative society, they was asking me whether cooperative society will be covered by AOP BOI. Yes, cooperative society's income is also taxable at slab rate, no, if you remember. Now, for applying the partial integration scheme, two conditions are required to be fulfilled. Number one condition, non-agricultural income exceeds the maximum exemption limit. Maximum exemption limit means basic exemption limit. your non-agriculture income should be more than the basic exemption limit, and your net agriculture income should be more than 5,000. More than 5,000. So there are two conditions. There are two conditions. Condition 1, condition 2. Your non-agri income is more than basic exemption limit. This is the first condition. Second condition, your net agri income. See, when we say income, it is always net. Net agri income is more than 5,000. Two conditions. If both the conditions are fulfilled, between both the conditions, it is and. So, if both the conditions are fulfilled, then partial integration scheme will be applied for the purpose of calculation of tax liability. You look at the example of Manoj. What is his non-agriculture income? 5 lakhs. Is that more than the basic exemption limit? Yes. What is his net agri income? That is also 5 lakhs. Is that more than 5,000? Yes. So both conditions are fulfilled. So Manoj's tax liability would be calculated by applying the provisions of partial integration scheme. Have you understood this? Yes or no? Quickly tell me yes or no. Yes. Now, partial integration scheme is applicable in this case, that you might have understood. Now, the point is, when partial integration scheme is applicable, how do you calculate the tax liability? There are 3 steps involved. Whenever partial integration scheme is applicable, there are 3 steps involved in the calculation of tax liability. Step number 1, you calculate tax liability on agri income plus non-agri income. You calculate tax liability on agri income plus non-agri income. Rizwan is asking me, sir, what do you mean by maximum exemption limit? Rizwan, maximum exemption limit means basic exemption limit. Basic exemption limit, some people call it as maximum exemption limit, but in law they are using the word maximum amount of income not chargeable to tax. In law they are using the word maximum amount of income not chargeable to tax. You may call it as maximum exemption limit, but people popularly call it as basic exemption limit. In the chapter of basic concept, you know now, people falling into first category, their basic exemption limit is 2,50,000. People falling into second category, age is 60 years or more, less than 80, and they are resident, basic exemption limit would be 3 lakhs. So that is nothing but the maximum exemption limit. Now, these two conditions are fulfilled now. You will apply the partial integration scheme for calculation of tax liability. Now, I'll show you the process or the steps involved in the calculation of tax liability. If the partial integration scheme is applicable, you have to give me the amounts. See, you calculate the tax liability on agri income plus non-agri income. What is my agri income? What is the agri income of Manoj? 5 lakhs. What is non-agri income of Manoj? 5 lakhs. Take the total of both, 10 lakhs. On that you calculate tax. On that you calculate the tax. That will be 1,12,500. You just calculate the basic tax. Don't apply the cess here. This is the first step. So, in step number 1, I am calculating tax on 10 lakh as if the entire 10 lakh is non-agriculture income. Actually, in that 10 lakh, there is an agriculture income of 5 lakhs, but in step number 1, I am considering the agri income also non-agri income for the time being, and I am calculating the tax liability. So, on the amount of 10 lakh income, I am calculating the tax as if the agri income is also non-agri income only. So this is my step 1. Then in step 2, I will calculate tax liability on agri income plus the basic exemption limit. I will calculate tax liability on what? Agri income plus the basic exemption limit. Can you tell me what is agri income? 5 lakhs. Manoj is falling into first category, na? So his basic exemption limit will be 2,50,000. You take the total of both. It is 7,50,000. On that you get me the amount of tax. What is the tax on the amount of income of 7,50,000? What is the amount of tax on the income of 7,50,000? Up to 5 lakh 12,000. Above 5 lakh extra income is 2,50,000. On that 20%. That is 50,000. 50 plus 12,500 is 62,500. Have you understood this very clearly? Step 1, step 2, do you have any confusion? Shall I proceed? Okay. Now, who is this admin? Who is this admin? Do you have any doubt? Do you want me to recap this step 1 and step 2? Okay. First of all, have you understood when the partial integration scheme is applicable? When the non-agri income is more than the basic exemption limit and net agri income is more than 5,000. In our example, Manoj's non-agri income is how much? 5 lakhs. Is that more than the basic exemption limit? Yes. What is Manoj's net agri income? That is also 5 lakh. Is that more than 5,000? Yes. So both the conditions are fulfilled. So you have to calculate the tax liability by applying the partial integration scheme. And when you calculate the tax liability by applying the partial integration scheme, 3 steps are involved. 3 steps are involved. Step number 1, you calculate tax liability on non-agriculture income plus agriculture income. So you take the non-agriculture income, to that you add the agriculture income, you take the total, on that total income, you calculate the tax by applying the slab rates. So in step number 1, you are considering your agri income also non-agriculture income and you are calculating the tax. So you are calculating tax basically on 10 lakhs. On 10 lakhs the amount of tax will be 1,12,500. Yes, is that very clear, admin? Rathika? Yes, okay, next. Step number 2. Step number 2, we are calculating tax liability on agriculture income and basic exemption limit. What is agriculture income? 5 lakhs. What is the basic exemption limit? In case of Manoj, 2,50,000. So I am taking the total of both, which is 750. On that 750, I have calculated the tax liability of 62,500. Now you may ask question, why you are calculating tax on this agriculture income? Agriculture income is not taxable. Basic exemption limit is also not taxable. What is the point of calculating the tax on this? That is what we understand when you move on to step number 3. So in step number 2, you are calculating tax on agri income and you are calculating tax on basic exemption limit. Now step number 3. Step number 3 is nothing but tax calculated at step number 1 minus tax calculated at step 2. See, step number 1, income is how much? Step 1, income was 10 lakhs. Tax was 1,12,500. Step 2, income was 750. Tax on that was 62,500. Now what we are saying now, in step 1 we took the agriculture income into the total income. We calculated the tax as if the entire income is non-agriculture income. Now we know that out of 10 lakhs, 5 lakh is agriculture income. We know that. On that agriculture income, we do not have the right to charge the tax. Also, we provide you the basic exemption limit of 2.5 lakhs. On that also, we are not charging the tax. So, first of all, you have calculated tax on your total income of 10 lakhs. Then we say that out of this total income of 10 lakh, now, income up to 7 lakh 50, which is your agri income plus the basic exemption limit, on that portion we don't have the right to collect the tax. So what we are doing now, from the tax on the total income, which is 1,12,500, we will deduct the tax on the basic exemption limit and tax on the agriculture income, because we don't have right to levy tax on 750 now. We are calculating what is the amount of tax on 750, and that amount of tax we are deducting from the total tax. So what is the balance arrived? 50,000. To that I would add health and education cess at 4%. That is 2,000. So total tax liability in case of Manoj will be 52,000. Tax liability in case of Manoj will be how much? 52,000. Have you understood this? This is a procedure for calculating the tax liability. See, what is the logic behind it? What magic is happening behind this? Actually, it is not magic, it is logic only. Right now, it may appear to be a magic for you. How this is happening? You have followed 3 steps and his tax liability has increased drastically from 12,500 to 52,000. How this has happened? You may wonder about this. Why this has happened? So, we will understand why this is happening, or what trick government has applied to ensure that the tax liability increases. That is what we will understand. But first of all, have you understood the calculation step 1, step 2, step 3 very clearly? Have you also understood that when partial integration scheme is required to be applied? Partial integration scheme is required to be applied only when 2 conditions are fulfilled. Number 1, your non-agriculture income is more than the basic exemption limit and your agriculture income is more than 5,000 rupees. You apply the partial integration scheme for calculation of tax liability. You follow 3 steps. Step 1, you calculate tax on agri income plus the non-agri income. Step 2, you calculate tax on agri income plus the basic exemption limit. Then from step number 1, you deduct the amount of tax arrived at step number 2. You will get the balance tax. On that you apply 4% cess. You will get the final tax liability. Examiner is not going to tell you, or examiner is not going to instruct you that in this question partial integration scheme is applicable. You should be very much alert. The moment you see that agriculture income is more than 5,000 and non-agriculture income is more than the basic exemption limit, by default you have to apply the partial integration scheme. Examiner is not going to remind you that you have to apply partial integration scheme in this question. No. You have to, the moment you get the agriculture income, you should check whether those 2 conditions are fulfilled or not. And if those 2 conditions are fulfilled, you apply the partial integration scheme for calculation of tax liability. No one is going to remind you. Now doubt may come in your mind that what magic has happened behind this, that his tax liability has drastically increased to 50,000 rupees from 12,500. Can you tell me what is Manoj's total income? 10 lakh rupees. I will help you to understand. I will help you to understand what government is doing, how the tax liability is increasing. See, Manoj's total income is 10 lakhs. This total income, na, Dikshit, what difference does it make? Every head of income tax rate is same, na? Slab rate. Dikshit, generally agri activity is considered as business activity. It is considered as business activity. But anyway, your income is taxable at slab rate. I am moving on to explain you what background calculation is happening. Anu is asking me, sir, what if those two conditions are not fulfilled? If those two conditions are not fulfilled, then you calculate tax in the normal manner. For example, non-agri income is not 5 lakhs. For example, non-agri income is 2 lakhs. If non-agri income is 2 lakhs here instead of 5 lakhs, then non-agri income does not exceed the basic exemption limit. First condition is not fulfilled. Then this agri income of 5 lakh will be exempt. Non-agri income 2.5 lakh, that is also exempt because it is within 2.5 lakhs. Tax liability will be 0. In other words, tax liability is required to be calculated in a normal manner. Exempt the agriculture income, on the balance income, non-agriculture income, you apply the slab rate and you calculate the tax. That is the tax liability calculation in a normal manner. If two conditions are not fulfilled, you calculate the tax liability in normal manner. Have you understood? Shall I proceed? Yes or no? Now listen to me very carefully. Total income here is 10 lakh rupees. Out of 10 lakh, can you tell me what is the quantum of agri income? 5 lakhs. What is basic exemption limit in case of Manoj? 2 lakh 50. Can you tell me what will be the balance income in that case? Balance income 2 lakh 50. Agriculture income is not taxable, so multiply by 0 percentage. Tax is 0. Basic exemption limit, that is also not taxable, so multiply by 0 percentage. Tax is 0. On this 2.5 lakh, we have applied a 20% tax rate. So the amount of tax is how much? 50,000. On that we have applied 4% cess, that is 2,000. This is the way your amount of 52,000 is arrived. This is the way your amount of 52,000 is arrived. This 52,000 na, which you have ascertained by following 3 steps na, what is the calculation in the background which is automatically happening is agriculture income, no tax is levied, basic exemption limit, no tax is levied, balance income na. In this example, I am talking only about this example. If the example changes, numbers changes, the calculation would also change. This you are not supposed to show in the examination. This is for your better understanding. On this 2,50,000, 20% tax is levied, so that is 50,000 rupees, and 4% cess on that, that is 2,000. So the amount of 52,000 is arrived. Now, why 20%? You may think why 20%? You may think why 20%? I'll try to make you understand. See, if you can understand, that is excellent. If you don't understand, forget about it. We are trying to understand the reason behind the provision. You have to follow the procedure, calculate the tax liability, story is over. I am just trying to make you understand the reason behind the provision. When you were a kid, when you were a small kid, You used to save money in piggy bank, na? In piggy bank, you used to save money. So, say for example, I am making a piggy bank for you. In this piggy bank, we will put your income. We will put your income. Let me make a slightly bigger in size. This is your piggy bank. In this piggy bank, we will put the income. We will put the income here. Now you recollect that basic concept chapter, na, category 1. What is the slab? From 0 to 2,50,000. Your income is taxable at 0%, correct? From 2,50,000 to 5 lakhs, your income is taxable at 5%. From 5 lakh to 10 lakh, your income is taxable at 20%. Above 10 lakh, your income is taxable at 30%. Now, you are having which income? Two incomes. You are having two incomes. Number one, non-agri income. How much? 5 lakhs. And you are also having agri income. How much? That is also 5 lakhs. Total is 10 lakhs. See what government is doing here. First of all, government is picking up your non-agricultural income. This non-agricultural income will put in a piggy bank. In piggy bank, we are having 4 slabs. Slab 1, slab 2, slab 3 and slab 4. I am picking up your non-agricultural income and I am putting into that piggy bank. The amount of non-agricultural income is how much? 5 lakhs. This 5 lakh will fit where? Out of 4 slabs. Where this 5 lakh will fit? Out of 5 lakh, 2.5 lakh will fit in slab 1 and 2.5 lakh will fit in slab 2. Yes or no? Correct? Huh? Yes or no? If I pick up this non-agriculture income of 5 lakhs and if I put here in a piggy bank, then 2,50,000 will fit into slab 1, 2,50,000 will fit into slab 2. Now I am picking up the agriculture income of 5 lakh and I am putting that in a piggy bank. Don't you think if I put agriculture income of 5 lakh in a piggy bank, the non-agriculture income which I had inserted in that piggy bank has to move ahead? See, when you board a train, if someone is standing on the door, when you board a train, he has to get inside. Na? He has to get inside and you will occupy his place. After you, someone else is boarding the train, then you have to get inside and that person will occupy your space. Similarly, I had inserted the non-agriculture income of 5 lakh rupees in this piggy bank. That 5 lakh of non-agriculture income was occupying slab 1 and slab 2. The moment I pick up the agriculture income of 5 lakh, once again I put that in piggy bank, what will happen? My non-agricultural income, which was earlier occupying slab 1 and slab 2, will get shifted further. Where it will go? It will go in slab 3. It will go in slab 3. And my agriculture income of 5 lakhs, that will occupy slab 1 and slab 2. That will occupy slab 1 and slab 2. And my non-agriculture income, which was earlier occupying slab 1 and slab 2, will get shifted entirely to slab 3. Have you understood this? Have you understood this? Oh, yes. See, this is logic behind provision. You may or may not understand. If you understand, excellent. If you don't understand, forget about it. Just follow the steps and calculate the tax average. That's all. I am trying to make you understand what is the reason behind the provision. So first I am picking up the non-agriculture income. I am putting that in my piggy bank. It is occupying my slab 1 and slab 2. Then I am picking up the agriculture income. Once again I am putting that agriculture income into that piggy bank. The moment I put the agriculture income in the piggy bank, the non-agriculture income will move ahead. It will occupy slab number 3 and my agri income will occupy slab number 1 and slab number 2. Because my agri income is 5 lakh, 2.5 lakh will go to slab 1, 2.5 lakh will go to slab 2. And non-agriculture income is also 5 lakh, that will occupy slab 3, that is from 5 lakh to 10 lakh. So my point is, when I added my agri income to non-agri income, the slab rate of my non-agri income has changed. Earlier the slab rate of my non-agri income was 2.5 lakh, 0%, 2.5 lakh, 5%. The moment I add agri income to non-agri income, my entire non-agri income slab rate changes to 20%. Yes or no? Entire non-agri income got shifted from slab 1, slab 2 to slab 3. In other words, the slab rate of tax for my non-agri income has changed from 0%, 5% to 20%. So my point is, when you add your agri income to non-agri income, and because of that, if the slab rate changes, then your non-agri income will be taxable at that higher slab. Non-agri income will be taxable at that higher slab. So I have tried to explain you this. Government is anyway not levying tax on your agri income. Please understand. Government doesn't have a right to levy tax on agri income. Government is not levying tax on agri income. But you are having agri income and non-agri income both, So what government is doing? Government is levying tax on your non-agri income at a higher rate. Because this non-agri income, government is having a right to levy the tax. So government says agri income no tax, basic exemption with no tax, but that balance non-agri income, we will levy tax at a higher rate because you are capable of paying more tax. You are having more income, you are capable of paying more tax. But since we do not have a right to levy tax on agri income, we will not levy, but we will levy tax on non-agri income at a higher rate. Is that very, very clear? Yes or no? This partial integration scheme, this theory you should read at home. Steps are also discussed. So this theoretical discussion of entire chapter is over. After the break, we'll refer to these 4 questions, 1, 2, 3, 4, and this chapter will come to an end and we'll move on to the chapter of income from salaries. Rizwan, in section 44 AD, we have nothing called as declaring higher income, lower income. Once again, So I'll remind you, in section 44 AD, we said that once the SSC has decided to, you are asking me question on 44 ADA, correct? Okay. You know, in case of section 44 ADA, A notified profession, a person earning income from notified profession can declare an income as per section 44 ADA, which is 50% of gross receipts, which is 50% of gross receipts. Now my point is, say for example, the gross receipts this is an example for section 44 ADA. Say gross receipts so you can get into section 44 ADA provided your gross receipt does not exceed 50 lakhs. So let me tell you that your gross receipts are say 20 lakh rupees. So you are eligible to get into section 44 ADA. Now tell me how much income you have to declare? At least 50% of gross receipts, no? So you have to declare an income of 10 lakhs. Now there are three possibilities. Possibility one, you say that I am declaring an income of 10 lakhs. This is possibility number one. Income declared in your income tax return is 10 lakhs. Possibility number two, you are saying that no, I have not earned 10 lakhs, I have earned more. I have earned 12 lakhs, so I want to declare an income of 12 lakhs. Possibility three, you are saying that I have earned only 8 lakhs. So let me allow me to declare income of 8 lakhs. See, if you declare an income of 10 lakhs, then section 44 AA, that is books of accounts, not required to be maintained. Section 44 AB, audit of books not required to be carried out. What if you declare an income of more than that? Then also you need not maintain the books of accounts and you need not get your books of accounts audited. If you declare higher income, government doesn't have any objection. If you declare higher income, government doesn't have any objection. Lastly, if you declare income which is less than 50% of your gross receipt, then government says whether your total income is more than the basic exemption limit, whether your total income is more than basic exemption limit, you say yes. Then government will pick you up and they will drop you in the office of chartered accountant. You have to maintain the books of accounts and you have to get your books of accounts audited. Rizwan, have you understood this? So if you declare something less than what government is asking you to declare, then government says we don't have faith on your accounts. We don't have faith on you. You go to a chartered accountant, maintain a books of accounts, get them audited, then we will believe you. So friends, let us move on to this agriculture income quickly and let us wind up this chapter, very small chapter it is actually. I have kept it as separate chapter in the notes. In CA Institute material, we will find that agriculture income is part of the PGUP chapter, part of some other chapter, income exempt from tax. So let's move on to this. I am moving on to question number 1. We are on page number 167, question number 1. Mr. X is owning some land in West Bengal on which there is a forest of spontaneous growth. He clears the land and sells the timber at a profit of 25,000. Forget about the further part of the question. Tell me, this 25,000 is which income? Agri income or non-agri income? This 25 is which income? He is just clearing the, he is just cutting the trees, etc. which has, those trees have naturally grown on agriculture. Those trees are naturally grown on land now. He's just cutting and selling. He's just cutting the trees and selling it. Has he done any primary activity for that? No, not at all. He has not done any primary activity. So the income should not be agri income, it should be non-agri income. Mr. Redmi, it should be non-agri income. There is a forest of spontaneous growth. Spontaneous growth means naturally trees have grown on that land. He has not taken the effort to do any primary activity. So this 25,000 is non-agri income. Further it says, he then allows Mr. Y to cultivate paddy and other crops on that land, for which he has charged a rent of 5,000. So he is charging a rent of 5,000 for that agricultural land. He is charging a rent of 5,000. So that land is given to Mr. Y to do the agriculture activities, and he has charged a rent of 5,000. This is called as rent derived from agricultural land. As per section 2 clause 1a subclause A, this is considered as agri income. Further it says, Y hires a tractor from Z and charge being 2,000 and use this tractor for agricultural operations on agricultural land. So Z is receiving rent from the tractor. Z has given his tractor to Y for using it, and Z is receiving rent for the tractor. This rent for tractor is which income? Rent for tractor. If I am having a tractor, say for example, I am not a farmer, I am an investor. Wherever I get a better opportunity, I would invest my money. So I came to know that in a particular village, there are a lot of farmers, but they do not have their own tractors. So I have purchased 2 tractors, and whenever any farmer needs a tractor, I would let out my tractor, I would give my tractor on a rent, and I would get the rental income. So my income would be considered as which income? Definitely non-agri income. I am not doing any primary or secondary activities. So my income is non-agri income because it is earned just by letting out the machine. So the amount of rent which Mr. Z has earned by letting out his tractor, by giving his tractor on a rent to Mr. Y, that rent from tractor is considered as non-agri income. Further it says, by growing and selling agriculture product, Y makes a profit of 15,000. By growing and selling the agriculture produce, Y has made a profit of 15,000. This is definitely an agricultural income. This is an agriculture income. So you know the answers, but you have to write the answers. Give me a reference to this. You can refer at home. Try to give reference to section number, clause number if possible. Let's move on to question 3. Question 3. Mr. De Silva had estates in rubber, tea and coffee. Had estates in rubber, tea and coffee means he is into cultivation. He is into cultivation. He derives income from them. Income derived from a tea, rubber or coffee estate is an agriculture income. He has also a nursery wherein he grows plants and sells. Growing the plant and selling the plant is also an agriculture income. Further it says, for the previous year ending 31st March 21, he furnished the following particulars of his sources of income from estate and sale of plants. You are requested to compute the taxable income and tax liability for the assessment year 21-22. Now in the table they are using the word manufacture of rubber. Paragraph was just giving the details that he is owning a tea, coffee and rubber estate. So if you just refer to that paragraph above the table, You can say that his income is purely agriculture income. The moment you refer to the table and manufacturing word is appearing here, then you will say that he is engaged in agri as well as non-agri activity. His income is of composite nature. His income is of composite nature. So in that, this 6 lakhs, 4 lakhs, 58 lakhs, whatever he has earned, it is a composite income. In case of tea, what is the ratio of agri to non-agri? 60-40. In case of rubber, 65-35. In case of coffee grown and cured, 75-25. So you have to bifurcate this in agri and non-agri. Sale of plants from nursery, this is purely agri, 100% agri income. Yes, now you bifurcate this quickly. Quickly bifurcate this amount. Give me the amounts very quickly. First is manufacture of rubber, 8 lakhs. What is 65% of that? 65% of that is how much? 520. Rubber 520 would be agri income. Non-agri income would be 280. Correct. Next is what? Manufacture of coffee grown and cured, 4 lakh 50. 75% of that is how much? 337,500. 3,37,500. Coffee. What is 25%? 1,12,500. So this is done. T 6 lakhs into 60%, 360 into 40%, 240. Next is sale of plant, 3 lakhs. Sale of plant, 3 lakhs, entire income is agri income. Take the total, 520 plus 337, 500 plus 360 plus 3 lakhs. 9 plus 5, 14. 14 lakh, 15 lakh, 17,500. Are you getting this amount? 15 lakh, 17,500. Yes, what about the non-agri income? 280, 240 and 1,12,500. 6 lakhs, 32,500. 6 lakhs, 32,500. Have you understood this? Do you believe that the agri income is more than 5,000 rupees? Yes, it is 15 lakh rupees. Do you believe that non-agri income is more than basic exemption limit? Yes. Both the conditions are fulfilled, correct? Huh? Your agri income should be more than 5,000 rupees. This condition is fulfilled. Your non-agri income should be more than the basic exemption limit. This condition is also fulfilled. So you have to apply the partial integration scheme for calculation of tax liability. Let us calculate the tax liability by applying the partial integration scheme. Step number 1 is to compute tax on Agri income plus non-agri income. What is the amount of agri income? 15,17,500. What is the amount of non-agri income? 6,32,500. Take the total of this. How much it is? 21,50,000. Give me the amount of tax on this 21,50,000. 457,500. Yes, is that correct? 457,500. Kindly confirm. 457,500 is correct? Yes, okay. Let's move on to step 2. Compute tax on agri income plus basic exemption limit. What is agri income? 15,17,500. What is basic exemption limit? 2,50,000. What is total of this? 17 lakhs 67,500. What is tax on this amount? You will calculate tax on 767,500. 30% to that you will add 1,12,500. 340 to 750. I am not doing any calculation. I am just picking up the numbers from you. So don't give me the wrong numbers. Step 3 is step 1 minus step 2. One lakh 14,750. To this I will add health and education says 4%. How much it is? Now give me the amount of health and education says separately. 4,590. 4,590. So tax rebate is 119,340. Yes, have you all understood? Very simple it is. But to just follow the steps, calculate, that's all. I will send the solution for this also to you. I have discussed the entire solution. I have actually written an entire solution for you. But all the chapters, solution will be provided to you in a PDF form. Certainly, yes. So we have completed this question number 3. Shall I proceed? Yes, this is very clear. Yes, let's move on quickly. Question number 3 is also over. Question number 1 is also over. Let's move on to question 2. Question 2. Question 2, they have given you the information of different income and different expenses. They have given you the information of different incomes and different expenses. You have to tell me, I am giving you 4 options, whether particular entry is a agricultural income. Second option, it is an agricultural expense. Third option, it is non-agricultural income. Fourth option, it is non-agricultural expenses. And fifth is your favorite one, none of the above. So I have given you 5 options. You have to identify what it is. In question number 2, every entry we will refer and you have to identify what it is. So we'll try to segregate agriculture income, agriculture expense and non-agri income, non-agri expense. From agri income we will deduct the agri expenses. From non-agri income we will deduct the non-agri expenses. We will get 2 amounts, net agri income and net non-agri income. Once we get the amount of net agri income and net non-agri income, we'll see whether both the conditions for the applicability of partial integration scheme is fulfilled or not. If they are fulfilled, then what? Then we'll apply the partial integration scheme for calculation of tax liability. See, if you don't want to copy the solution right now, you need not copy in the notebook. Solution will be provided to you. Just discuss, just focus, give me the answers. Income from business of letting cycles on hire. Which income this is? Income from business of letting cycles on hire. Non-agri income. Next, lease rent received from land given to tenant for agricultural operations. So I'm getting a lease rent from letting out the agricultural land. This is my agricultural income. Next, sale of agricultural produce, landlord's share. I have got my rent in the form of share in the agriculture produce. I have sold that. That is my agriculture income. Very good. Next, sale of seedlings grown in nursery. In nursery, I have grown seedlings. I am selling the seedlings. That is an agriculture income. Agriculture produce consumed for household. Agriculture produce consumed for household. This is the most important one. No, but I have not given you option as personal. Na. Sarvanna, you have to give me the answer out of those 5 points only. Is it an agri income, agri expense, non-agri income, non-agri expense or none of the above? Yes. Bhaskar has given me the answer, agri income. All others are saying it is none of the above. See, basically it is drawings. What entry you pass in drawings? Drawings account debit to goods withdrawn by proprietor. Correct? Drawings account debit to goods withdrawn. This is what the entry you pass now. Goods withdrawn will go where? Drawings will be deducted from your capital in the balance sheet liability side. This goods withdrawn will appear where? Goods withdrawn will go to trading account credit side. Will go to trading account credit side. So definitely it is income. Now you don't tell me that this is not income. Whenever you withdraw the goods, you write on the credit side of trading account. Na? So anything appear on the credit side of trading account is your income only. So think that for the time being, think that if you would not have withdrawn those goods and if you would have sold those goods, then the income which would have arisen by sale of goods, that would have been considered as agriculture income. So this should also be considered as agriculture income. Have you understood this? In this entire question, this is the most important point. We can mark this as very important. Day before exam, kindly revise this. Otherwise, you are gone. Because one mistake, all the steps will be wrong. All the tax liability will be wrong. Next, sale proceeds of agricultural land situated in a village. Sale proceeds of agricultural land situated in a village. This cannot be considered as an agri income. This has to be considered as a non-agri income. But when we move on to the chapter of capital gain, you will realize that sale proceeds of agricultural land situated in village is not taxable. If the agricultural land is situated in urban area, then the profit on sale of agricultural land situated in urban area is taxable under capital gains. But if there is a profit on sale of agricultural land which is situated in a village, it is not taxable at all. That we'll discuss in detail when we move on to the chapter of capital gain. So as of now, it is none of the above. You can take this as none of the above. None of the above. Nota. Next, fixed deposit interest received from companies on deposit made from sale proceeds of land. FD interest is non-agri income. This is non-agri income. Dividend received in April 2020 from an Indian company having rubber plantation. You have invested money into the shares of a company which is engaged in agri activities. Income of company will be agri income, but your income will be non-agri income. Now, second most important point in this question, second important point, there are chances that you may do the mistake. Salary received as a partner from the firm growing and manufacturing tea. This 36,000 should be considered as what? Yes, everyone should answer. So Deva says agri income, Sarvana says agri income. The correct is what? Correct answer is it should be considered as composite income because they are writing the word growing as well as manufacturing. Growing as well as manufacturing. So it is a composite income. Nature of income in the hands of the firm will also be composite income. Nature of income in the hands of the partner will also be composite. So this 36,000 needs to be bifurcated in two parts. 60% will be agri income. Remaining 40% would be considered as non-agri income. Have you understood? Next, payment of government tax on agricultural land. This is agricultural expense. Expense relating to agriculture. Expenses incurred in nursery. This is also an agricultural expense. Purchase of seeds. This is also agricultural expense. Correct? Now, I don't have that much time to write everything. You also don't write. I'll send you the solution. You just give me the answers. Pick up the calculator quickly. Take all the agriculture income. First of all, you take 48,000 in your calci. Type 48,000. We are finding out net agri income. We are finding out what? Net agri income. So first of all, we'll take all agri income. From that, we'll try to deduct agri expenses. So we'll arrive at the amount of net agri income. Take 48,000. To that you add 30,000. To that you add 10,000. Then you add once again 10,000. Then you add 60% of 36,000. 60% of 36,000 is how much? 60% of 36,000? 18,360. Or 21,600. Oh, add 21,600. 21,600. Add to that agri income. Now from that total, you deduct 6,000. You deduct 6,000 as agri expense, 10,000 and 3,000. and give me the amount of net agri income. Net agri income. So you take the agri income, from that you deduct the agri expenses. Your net agri income is 1,600,000. Yes, correct. Correct it is. So now we are on question number 2. Net agri income is 1,600,000. Now give me net non-agri income. Yes, non-agri income. Income from business of letting cycles on hire, 4,40,000. To that you add FD interest 18,000, so it is 458 plus dividend 6,000, it's 464, and 40% of 3,600. 40% of 3,600 is 14,400. 14,400. Correct. 478,400. Yes or no? So you have 478,400. Can I say your net agri income is more than 5,000? Your net agri income is more than 5,000. First condition is fulfilled. Your net non-agri income is more than the basic exemption limit. So second condition is also fulfilled. So your condition 1 is fulfilled. Your condition 2 is fulfilled. So apply the partial integration scheme, calculate the tax liability. Step 1, you take agri income 1,600,000, non-agri income 478,400. What is total? 5,79,000. What is the amount of tax on that? Up to 5,12,500, above that 79,000 on the 20%. 15,800 and 12,500. 28,300. Let's move on to step 2. Agri income 1,600,000. Basic exemption limit 2,50,000. Total 3,50,600. On that, what is the amount of tax? Don't add surcharge, don't add education cess, nothing. $5,030. Then step 3, 28,300 minus 5,030 is how much? 23,270. To that you add health and education cess 4%. $931. What is the total? $24,201. Rounded off to nearest multiple of 10 rupees. 24,200. Yes. Is that very, very clear? All of you are understanding now? So question number 2 is over. Let's move on to the last question now. Do you feel that speed is higher? Speed is okay na? My speed is okay na? Because in practical questions, this should be the normal speed. Slow only. Oh, if you say slow only, I need to increase the speed. Question number 4. Mr. Dinesh Kulkarni is engaged in manufacturing sugar. Manufacturing sugar. He owns agricultural land where he has his own cultivation of sugar cane. Cultivation of sugar cane. Cultivation of sugar cane means he is having agri income. Manufacturing sugar means non-agri income. In other words, nature of his income is composite income. Nature of his income is composite income. Sugar cane cultivated in his farm is used as raw material in his own factory at Nashik. So, referring to the first paragraph, we can say that his income is composite income. Now, listen to me very carefully. Here, you are not required to calculate the tax liability. Read this first. You are requested to advise him about the correctness of the same and compute his net profit after giving effect to relevant provision of the act. See what they have done now. This person might have maintained the books of accounts. He might have already prepared the profit and loss account. From that profit and loss account, his objective is to calculate the income from business profession. Basically, income from business, that is nothing but the non-agricultural income. So, all those incomes which are credited to profit and loss account and they are purely agricultural income, they are required to be deducted. Similarly, all those expenses which are debited to profit and loss account and they are related to agriculture, that is their agricultural expenses, deduction will not be allowed for that, so they are required to be added back. See, profit and loss account profit is a composite income. Our objective is to compute non-agri income. So, all the entries which are related to agri should be removed. So, those income which are appearing on the credit side of P&L, purely agri income, that should be deducted. Those expenses which are debited to profit and loss account, they are purely related to agri, those should be added. Besides that, here we need to apply rule number 7 because it is a case of sugar cane. Rule number 7 says what? For segregating your composite income into agri and non-agri, what do? You take the fair market value of sugar cane used in your own factory as raw material. Remove that fair market value of sugar cane from your composite income. The amount which is arrived is nothing but a non-agri income. So from composite income, you remove what? You remove the fair market value of sugar cane used in the factory as raw material. And once you deduct that, the balance income is nothing but a non-agriculture income. So in this case, what he has done now, he has picked up the amount of net profit as per profit and loss account. He has done certain adjustments and he has left the solution partly. Thereafter, he did not know what to do about certain adjustments. So he has left the solution partly and he has given you certain adjustments, saying that I do not understand these adjustments. Now you give the effect of this adjustment and give me the amount of non-agri income. So solution is already started by the examiner. Few adjustment he has already given the effect, and few adjustment he did not understand what effect is required to be given. So he has left those adjustments for you. So you need to start the solution from the point where he has left. So he has left the solution midway, somewhere in between. So you have to pick up amount the amount which he had in his calculator, where he left the solution midway. At that point of time, he might be standing at some amount now. That amount you should pick up, do the remaining adjustment which he could not understand, and then you find out the non-agree income. So here our objective is not to calculate the tax liability, our objective is to calculate the non-agree income, that is nothing but the PGBP income. Keeping in mind our objective of calculating PGBP income, we will read this question. He has submitted the following details relevant to calculation of his taxable income for the year 2021. It says net profit as per profit and loss account. Net profit as per profit and loss account after giving effect to all the provisions of the Act. After giving effect to all the provisions of the Act except following points. These points he has not given the effect because he do not know what effect is required to be given. And this 597 is not the amount of net profit as per profit and loss account. Net profit as per profit and loss account might be something else. He has picked up the amount of net profit as per profit and loss account. To that he has done certain adjustments and he has arrived at an amount of 597 and he has left the amount of 597 for you. And he says that following 4 adjustment now, I have not given the effect. You decide what effect is required to be given. And you give the effect and you give me the PGBP income. Correct. So in your calculator, you will be picking up the amount of 597. Now you tell me, sale proceeds of sugar credited to profit and loss account. Sale proceeds of sugar credited to profit and loss account, which income? It's a composite income. It's a composite income. This 35 lakh 50 is already part of 597. Yes or no? This 35 lakh 50 might be appearing in the credit side of your profit and loss account. If it is appearing on the credit side of your profit and loss account, don't you feel it is already part of your profit, adjusted profit, which is 597? Yes, this should be ignored because this is already part of your profit. Our objective is to reduce the amount of fair market value of produce used in the factory as raw material. The moment we deduct that, this composite income of 35 lakh 50 will get automatically converted into non-agriculture income. So this 35 lakh 50 is already there in that 597. No adjustment is required to be given. If we don't do any adjustment, then in that case we can say that 597 includes 35 lakh 50, which is the composite income. We should give the effect of fair market value of raw material used in the factory, that's all. So this should be ignored. Have you understood this? 35 lakh 50, why it is required to be ignored? It is already appearing on the credit side of your profit loss account. Is it taxable? Yes. But in this 35 lakh 50, some portion might be agri income. So we'll deduct that amount. Na? Why should we remove that entire amount? We'll remove only the agri portion. For that you have to follow rule 7. And rule 7 says you take the fair market value of raw material used in the fair market value of produce used in the factory as raw material. Are you understanding? Shruti madam, yes, it says effect is not given. Shruti madam, definitely it says effect is not given. But it is not necessary for you to give the effect now. For everything it is not necessary to give effect. You have to see whether the effect which is gone is correct or incorrect. Effect is not given means while calculating your business income he has not given the effect. In profit and loss account effect is already given. Are you understanding? In profit and loss account this might have been already credited. Where the effect is not given, in the statement of computation of business income, income computation statement which is made under the Income Tax Act, in that effect is not given. Okay. Effect is not given and effect is not required to be given also. It is not required to be deducted and it is not deducted. So what should we do? We should ignore. We should ignore. Is that clear to everyone? Say yes or no. Yes, okay. Let's proceed. Sale proceeds of sale of sugar cane credited to profit and loss account. Sale proceeds of sale of sugar cane, sugar cane, sugar cane. It is not using the word sugar. They have sold sugar cane. Sale proceeds of sale of sugar cane. Selling sugar cane is which income? Selling sugar cane is which income? Selling sugar is a composite income, but selling sugar cane is an agriculture income. This agriculture income is credited to your profit and loss account. What is our objective? Our objective is to find out the non-agri income. So what should we do about this agri income, which is already credited to your profit and loss account? We should remove. We should remove. For that we will deduct. Because our objective is to ascertain the non-agri income. So all those entries which are related purely to agri, they are required to be removed. Simple. It is already credited to P&L account. So addition effect is already gone. So we should deduct. Is that very clear? Yes or no? Yes or no? Next. Now listen to me very carefully what it says. Manufacturing expenses are debited to profit and loss account. Some manufacturing expenses are debited to profit and loss account. Some manufacturing expenses are debited to profit and loss account, means minus effect is already gone. And the manufacturing expense which are debited to profit and loss account it includes what? Cost of sugarcane transferred from farm to factory and used in the factory as raw material. It includes what? Cost. So in your profit and loss account debit side, you are written to manufacturing expenses. Inside, in that manufacturing expense, you have the cost of sugarcane used in the factory as raw material. Can I say this cost of sugarcane used in the factory as raw material should be segregated as agri income? But as per rule 7, cost is not required to be segregated. What is required to be segregated is fair market value. What is required to be segregated is fair market value. Yes or no? So they have deducted what? Something is debited to profit and loss account means it is already deducted, na? Something is debited to profit and loss account means already minus effect is gone. But this minus effect is gone for cost, na? It should go for what? It should go for fair market value. So can I say minus effect is gone wrongly for the cost? Minus effect is gone wrongly for the cost. So we should plus. We should add. And then we should give the minus effect for what? Market value. Irrespective of whether market value is less than the cost or more than the cost. Intentionally examiners given you the value of market value to be lower than the cost. Don't get confused. Logic is fair market value should be removed. Simple. Irrespective of whether the fair market value is more than the cost or less than the cost, it will not make any difference. So you should remove fair market value. How much you will remove? 310. So give me what is the amount of income from business profession? 597 minus 2,05,055 plus 3,55 minus 3,10. What is the amount? 436,945. So this 436,945 is the amount of income from business. This is non-agri income. This is non-agri income amount of income from business. Yes, have you all understood this very clearly? So with this, we have completed the chapter of agriculture income. Agriculture income chapter is over. I'll send you solution for agriculture income chapter also. I'll also send you the solution for business profession chapter. Whatever I have written here now, actually I did a mistake. All these things which I explained you, this partial integration scheme, I took an example to make you understand. Na? Manoj's example. Everything is written. I wrote this inside the classroom. I wrote right now. But I already have that in explanation sheet. I did not take that with me. Anyway, so our agriculture income chapter is over. Now we are moving on to the chapter of income from salaries. Now we are moving on to which chapter? Income from salaries chapter. Now we are moving on to the chapter of income from salary. It is page number 36 in your textbook. Page number 36. Now listen to me very carefully. So friends, let's move on to the chapter of income from salary. Interesting chapter, lot of calculations are involved, but yes, it is more of theory. Income from salary section is starting from 15, it is ending at section 17. So the range of the section is 15 to 17. The first section in the range is always a charging section. I have given you the list of sections here. Around 1/4 page you have the list of sections here. Section 15 is charging section. Section 16 clause 1A standard deduction. Section 16 clause 2 deduction for entertainment allowance. Section 16 clause 3 deduction for profession tax. Then we have section 17 subsection 1 meaning of salary. Then we have section 17 subsection 2 definition of perquisite. Then we have 17.3 definition of profits in lieu of salary. And then we have a lot of sections relating to exemption. These all sections are relating to exemption. So this is the list of sections which we will be discussing in this chapter. Now let's move on to the first section of this chapter, that is charging section. Charging section, that is chargeability. What it says, any amount due to or received by an employee from employer and falling within the purview of meaning of the term salary is taxable under income from salaries. See, in any transaction there are two persons. If it is a transaction with respect to sale of goods, then there is a seller and buyer. If it is a transaction with respect to rendering the services, sale of services, then it is a service provider and service recipient. In your mobile phone, say for example, you are having a Vodafone SIM card. Then Vodafone is a service provider, you are the service recipient. At your home, you are having an internet connection. The company which has provided you the internet connection is a internet service provider, ISP, and you are the service recipient. Who will pay money to whom? Definitely service recipient will pay money to service provider. Service recipient will pay money to service provider. So we are in chapter of income from salaries. It is section 15 to 17. Section 15 is charging section. It says that any amount due to or received by an employee from the employer which falls within the meaning of purview salary, it is taxable under income from salaries. From this sentence, I am picking up two words. Number one word is employee and number two word is employer. Now I say that between two persons, if there is a employer-employee relationship, then income is taxable under income from salaries. If employer-employee relationship exists, then it is income from salaries. If employer-employee relationship do not exist between two persons, if employer-employee relationship do not exist, then the amount received is taxable either under income from other sources or under the PGVP. For explaining this, see, this is the golden rule of the chapter of income from salary. You had golden rule in accounts, na? Similarly, here for the chapter of income from salary, this is the golden rule. What is this golden rule? Employer-employee relationship. So, golden rule of the chapter of income from salary is employer-employee relationship. I told you that in case of sale of services, there are two persons. Number one, service recipient, person to whom the services are rendered, and the other one is service provider, person who is providing the services. Service provider would provide the services and service recipient will pay money for that. So here service recipient is a payer because he is paying money, he is a payer. Service recipient is a payer. Service provider is a payee. We say that if there is a employer-employee relationship between payer and payee, if there is a employer-employee relationship between payer and payee, then amount received by payee is taxable under income from salaries. Now the question is how to identify whether there exists an employer-employee relationship between payer and payee or not. It is very easy to identify whether between the payer and payee there exists an employer-employee relationship or not. For that, see, it is very easy to identify. For example, from your home to this class inside commerce studies, you are traveling from your home to class in a auto rickshaw and you are paying fare to that auto rickshaw person. Are you paying salary to him? He has provided you transport services, you are paying money to him, you are payer, he is paying. Is it salary for him? Do you believe that there is an employer-employee relationship between you and the auto rickshaw owner? Answer is no. There is no employer-employee relationship. So amount received by him is taxable as his business income or other sources income. It can't be taxed under income from salaries. I am rendering services to inside commerce studies, but I am independent professional. I am working with n number of different coaching classes. So there is no employer-employee relationship between us. So whatever fees I receive from them, it is income from profession for me. Similarly, inside commerce studies is rendering services to you and you are paying money to them. You are a service recipient. Inside commerce studies is a service provider. Here also there is no employer-employee relationship. So whenever there is no employer-employee relationship between the payer and the payee, income is taxable either under that PGVP or under that IFS. But if there is an employer-employee relationship, then income can be taxed under that income from salaries. Now the question is how you would identify whether there exists an employer-employee relationship between the payer and payee or not. For that you have to refer to the contract. For that, you have to refer to the contract. Contract which is entered between payer and payee, that contract you have to refer. This contract can be of two different categories. It can be number one, contract of service, and number two, it can be contract for service. In case of contract of service, we say that employer employee relationship exists. So amount received by payee is taxable where? Under income from salaries. Whereas in case the contract is of the nature of contract for service, then employer employee relationship do not exist. In this case, if the amount is received by payee, it can be taxed either under that PGBP or under that IFS. Now still you may ask the question that we have understood, if there is employer-employee relationship, it is income from salary. If there is no employer-employee relationship, it can be either PGBP or IFS. If it is contract of service, employer-employee relationship exists. If it is a contract for service, employer-employee relationship do not exist. So that is okay. But how do we come to know whether it is a contract of a service or whether it is a contract for service? How we will come to know about it? So you should ask two questions to yourself. Number one, what to do? What to do means contract is entered for doing what activities? Number one, what to do? And number two, how to do? What to do, how to do? If both of them are decided by the service recipient, what to do, how to do, what work is required to be done, and how it is required to be done. If both are decided by the service recipient, then it is a contract of service. There exists a employer-employee relationship. Amount received by payee is taxable under income from salaries. On the other hand, if what to do is decided by the service recipient, whether you should make note of it, I don't feel so. I don't feel so. See, if you are feeling sleepy at your home, you can make notes. If you feel, oh, I am bored listening to a lot of things, I am feeling sleepy, then you can make notes, otherwise not needed. If you feel writing can help you to remember, you can make notes, otherwise not needed. I am not going to make notes for the entire chapter, no. At the initial stage of the chapter, only for this concept. Rest all notes are properly provided in the textbook itself. They are full of flowcharts. Salary chapter is full of flowcharts. Everything is given there only. So what to do? How to do? If what to do is decided by service recipient and how to do is decided by the service provider. What to do is decided by service recipient, how to do is decided by the service provider. Then we say that employer-employee relationship do not exist. For example, you wanted to come at this premises to attend the lectures. So you left your house, you took the auto rickshaw and you told him, take me to this place. What to do? Take me to this place. Now how to drive a vehicle, you are not going to teach him. He knows. How to do? He already knows. In that case, what to do is decided by the service recipient. You have decided. and how to do is decided by the service provider. He is deciding. In that case, employer-employee relationship do not exist. For example, Tarun sir called me saying that, sir, I have few May 21 and November 21 students. I want you to take up income tax subject for them. So what he has told me, what is required to be done? Income tax subject is required to be taught to them in very much detail with lot of examples, more number of questions, etc. But how should I do it? Should I ask a question to him, sir, how should I do it? No, that I should know now. That I know. So what to do is decided by him. He is a service recipient. What to do is decided by him. How to do is decided by me. I am a service provider. In that case, there is no employer-employee relationship between us. So whatever fees I receive from him would be taxable to me. Definitely it is taxable to me, but not under that income from salary, under that income from business profession, or maybe if this is a part-time activity for me, income from other sources. Have you understood this? Now can you apply this and identify whether there is an employer-employee relationship or not? Yes, okay. It is very easy to identify. If even by applying these two parameters, what to do, how to do, you cannot conclude something, na? Then we have some multiple parameters. We have some extra parameters. If that service provider retires, in future, are you going to pay him gratuity? If that service provider retires in future, are you going to pay him the amount of provident fund? Are you maintaining provident fund for him? If yes, then there exists an employer-employee relationship. If yes, then there exists an employer-employee relationship. Do you believe Tarun sir is going to pay me gratuity if I retire? Is he going to pay me the provident fund if I retire? No. There is no employer-employee relationship. Are you going to pay gratuity or provident fund to that auto rickshaw owner? No. There is no employer-employee relationship. So, if you could not get the answer by applying the first two parameters, what to do, how to do, then you can apply the additional parameter that if the service provider retires, are you going to pay him the amount of gratuity or provident fund? If yes, then yes, there is an employer-employee relationship. If no, then there is no employer-employee relationship. Have you understood this much? Yes or no? Okay. When do we assess the income under that income from salary? If there is an employer-employee relationship between the payer and payee, then we assess the income under the income from salary. How do we decide whether there is employer-employee relationship or not? For that, you have to refer to the contract. Contract can be either contract of service or contract for service. In case of contract of service, employer-employee relationship exists. Employer-employee relationship means master-servant relationship. Master will give the orders and servant will follow the orders. Master will give the orders and servant will follow the orders. In case of contract for service, there is no employer-employee relationship, there is a principal-agent relationship between the payer and payee. This you can read on your own. In case of contract of service, that service recipient will exercise total control on the activities which are performed by service provider. In case of contract of service, the service recipient would exercise total control over the activities which are performed by service provider. But in case of contract for service, service provider do not have any control on the activities performed by service provider. For example, Manoj has completed his CA final. So he has become a chartered accountant. Now he has got a job in ICICI Bank. Now what to do? Who has decided what to do? Manoj has decided or ICICI Bank has decided? Definitely ICICI Bank has decided, na? Definitely ICICI Bank has decided what to do. That is the reason they might have advertised the vacancy position, that this position is vacant, this is the nature of job. If you feel that your experience matches this job description, you can apply for the interview. You can give the application, we'll take the interview. After Manoj has joined ICICI Bank, don't you feel ICICI Bank will exercise total control on the activities performed by Manoj? Yes. In that case, there is an employer-employee relationship between ICICI Bank and Manoj. So amount received by Manoj, service provider, from the service recipient, ICICI Bank, will be taxable under income from salaries. Whether employee is a service provider, definitely yes, employee is a service provider, yes. Let me take one more example. Manoj completed his chart accountancy and Manoj felt that no, I don't want to work for anyone, I want to work for myself. I want to be my own boss. No one should do bossing on me. I am the boss. That is what Manoj felt. So he did not join any organization. He started his own office. He started his own office. Now ICICI Bank has appointed Manoj for doing the audit of the bank. ICICI Bank has appointed Manoj as statutory auditors. So Manoj is going to render services to ICICI Bank. Manoj is a service provider. ICICI Bank is a service recipient. Do you believe there is an employer-employee relationship between them? No. Manoj is working as an independent professional. Do you believe that ICICI Bank will exercise control over the activities which are performed in the service, activities which are performed by Manoj? No. Do you believe ICICI Bank will give instruction as to how we should do the audit, how we should make the report? No. That all things will be decided by Manoj. In that case, we say that there is no employer-employee relationship. In that case, amount received by Manoj cannot be taxed under income from salaries. It is taxable either under the head income from business profession or under the head IFS. Have you understood this very, very clearly? Yes or no? Yes, yes, no, yes, very good. So if there is an employer-employee relationship, then the amount received by the service provider is taxable under income from salaries. If there is no employer-employee relationship, amount received by service provider is taxable either under profits and gains of business profession or under income from other sources. Now I have certain examples. Here we need to identify whether there exists an employer-employee relationship or not. College faculty. There is a faculty working in a college. He is rendering lectures and at the end of the month he is receiving fixed amount of money from college. Do you believe that there is an employer-employee relationship between the college faculty and the college? Definitely yes. That college faculty might be having an appointment letter from the college. So college will exercise total control over the activities performed by the faculty. So whatever money college service recipient has paid to the faculty service provider would be taxable to the faculty under income from salaries. But for example, I am going to the college as a part-time lecturer. I am not working with them. I am going twice in a week. Monday and Wednesday I take lecture for 2 hours. In that case, there is no employer-employee relationship. I am an independent person. Amount received by me will be taxable to me under that income from profession or income from other sources. So, point number 1, college faculty working in a college getting money from college is taxable under income from salaries. But same college faculty has set up a paper, has set up a question paper for the university examination, or he has checked some papers, he has checked the answer sheets of those students who have appeared for the examination, and for that he is receiving money from university. In that case, amount received from university will be taxable under income from salary. Sorry, will be taxable under income from other sources. Why? Because he is not having an appointment letter from the university. He is working with a college. He is working with a college. And he is receiving money from whom? He is receiving money from university. So there is no employer-employee relationship. Amount received from university will be taxable under income from other sources. Faculty I can bifurcate in two. Number one, faculty working with college. Working with college means he is having the appointment letter from the college. And few faculties also work directly with the university. In university also you can take the admission, na? Either you can take the admission in the college and those colleges are affiliated to university, or you can directly take admission in university. So there are teachers working with college also, there are teachers working with university also. If the teacher is working with college, he has received money from college, then it is income from salaries. But if he has received money from university, then it is income from other sources. Similarly, if the faculty is working with university, here also there are two possibilities: received money from college and received money from university. What will happen? If a university faculty receives money from university, this should be taxable under income from salaries because he is having an appointment letter of university. He is working with university, he is having an appointment letter of university. So any amount received from university should be taxed under income from salaries. But that same university teacher has gone to some college to provide training to some teachers, and college is paying him some remuneration. This cannot be taxed under income from salary. This will be taxed under income from other sources. Yes, have you understood this? So, if you are receiving money from an organization or a person whose appointment letter, who has given you the appointment letter, from same person you are receiving money, it is income from salary. If you receive money from some other person, it is income from other sources. For example, when you visit any hospital, in that hospital there are two types of doctors. One is a resident doctor, one is a visiting doctor. Resident doctor is working with that hospital throughout the day. Whenever you visit the hospital, that doctor will be available there. He is working as an employee of the hospital. Whatever money he is receiving from the hospital, it is income from salary for him. And then we have a second category of doctor who is having his own clinic, but he is visiting different hospitals on different days. Twice in a day, twice in a week he is visiting some one hospital. Twice in a day he is visiting some other hospital. So those doctors are called as visiting doctors. Amount received by the visiting doctors from the hospital is taxable to them under that income from profession, not under income from salary, because they are not the employee of that hospital. Have you understood? Yes or no? Second, see, first, second, both are over. Amount received by college lecturer from college. This is income from salaries. Examinership fees received by professor working with college from university. This is income from other sources. Let's now move on to third point. Point 3. Remuneration received by director from the company. Remuneration received by director from the company. See, in company there are two types of director, full-time director and part-time director. Full-time director is also called as executive director, part-time director is also called as non-executive director. Full-time director, sometimes it is also called as managing director. Full-time director is doing a job with the company. Full-time director is working with a particular company, he is doing a job with the company. Any amount received by the full-time director from the company is taxable to him under income from salaries. Because he is working with one same company, his office timing will be normal office timings only. So amount received by the full-time director from the company would be taxable to him under income from salaries. What about the part-time director? Part-time director would not go to the will not go in a company's office every day. He will just attend the board of directors meeting and he will provide the guidance. He might be having a lot of experience in different fields. So using his experience, he will provide the guidance to the company as to how to do the business, how to approach a particular problem, how to resolve a particular problem. So, part-time director will just attend the board meetings. For that, he will receive director's sitting fees. This director's sitting fees is received by part-time director to attend the board meeting and give the guidance. This director's sitting fees can be taxed either under income from profession or under income from other sources. If a person is acting as a director in a lot of companies and is guiding everyone, then he is an independent professional, his income can be taxed under income from profession. But say for example, person is acting as a part-time director in one company in his free time, then it is income from other sources for him. Then it is income from other sources for him. So, if the director is a managing director, full-time director, then the amount received is income from salary. If the director is a executive director, part-time director, you can call amount received by him is taxed either under profits and gains of business profession or income from other sources. Point 4, I have discussed with you in the chapter of PGVP. Remuneration received by partner from the firm. Remuneration received by partner from the firm. Remuneration received by partner from the firm. See, between the partnership firm and partner, there is no employer-employee relationship. Between the partnership firm and partner, there is no employer-employee relationship. Partner is not an employee of the firm. Partner is a part owner in the business of the firm. When an individual becomes a partner in a partnership firm by giving capital, his intention is not to render the services on the salary. His intention is to invest and earn profit. His intention is to invest money in business, work hard, put efforts, earn profits. Therefore, anything received by the partnership, anything received by the partner from the partnership firm would be taxable to the partner under that PGBP. So any salary, bonus, commission, remuneration, interest, whatever it is, whatever is received by the partner from the firm is taxable to partner under that PGBP. Point number 5, amount received by MP MLA. Amount received by MP MLA. If you win the state election, you will become MLA, Member of Legislative Assembly. If you win the state election, then you will become MLA, Member of Legislative Assembly. And if you win the central election, then you will become MP, Member of Parliament. You will become MP, Member of Parliament. See, this MP as well as MLA would receive fixed amount of remuneration from the government every month. So whatever remuneration is received by MP, MLA from the state government, central government should be taxed under which head? Do you believe there is an employer-employee relationship between the government and the MP, MLA? If you believe so, you are totally wrong. Because employer-employee relationship means master-servant relationship. Master means he will give an order and servant means he will follow the orders. Do you believe any MP is listening to the government? Do you believe any MLA is listening to the government? No, not at all. First of all, they are not appointed by the government. They are elected by us. So they are our representative in front of government. We have appointed them by giving a vote and they are working for us. They will take up our grievance and ensure that those grievances are communicated to the government and appropriate solution is arrived at. So this MP, MLA, they are called as public representatives. There is no employer-employee relationship between company and this MP, MLA. Therefore, amount received by them from the government is taxable under income from other sources. Point 6. Remuneration received by judges of High Court and Supreme Court. Remuneration received by judges of High Court and Supreme Court. Should it be considered as income from salary? Should we say that judges of High Court and Supreme Court, they are employees of the government? No, not at all. If they are considered as government employees, they are considered as employees of the government, then government would give instruction to the judges of High Court and Supreme Court. Then they will lose. Judiciary will lose its independence. Judiciary is an independent body. So the judges of High Court and Supreme Court, they are not going to take any instruction from the central government or state government. They are independent body. Definitely they will receive remuneration from the government only, but they will not report to the government. Government is not a reporting authority for them. They are independent person. Their job is to ensure that Constitution of India, any other law in this country is properly implemented. So, between the judges of High Court and Supreme Court and the government, there is no employer-employee relationship. These people are called as constitutional functionaries. These are called as constitutional functionaries. Amount received by them from the government is definitely taxable under income from salary, but you can't say that they are employees of the government, otherwise they will go on, government will go on giving instructions to them. So, in a case law, Justice Devaki Nandan Agrawal versus Union of India, it was decided that the judges of High Court, Supreme Court, they are not the employees of the government, even though they receive remuneration from the government. Amount received by them would be taxable under income from salaries only, but they are not considered as an employees of the government. They are called as constitutional functionaries. Their job is to ensure that the Constitution of India and other law in this country are properly implemented. So once again I move back to this chargeability section. Section 15. What it says? Any amount due to or received by employee from the employer is taxable under income from salary. From this sentence, I picked up two words, employer and employee, and we understood what is employer-employee relationship, how to identify whether there exists an employer-employee relationship between two persons or not. Now I am picking up next two words. One word is due, the other one is received. The first word is due, the second word is received. Received means receipt. Receipt means to receive money. Now I move on to the second part of the chargeability criteria, section 15. It says, salary is chargeable to tax either on due basis or receipt basis, whichever is earlier. Salaries, see, second part of the charging section, section 15, gives you the taxability criteria for salary income. It says salary income is taxable either on due basis or on receipt basis, whichever is earlier. Salary income is taxable either on due basis or on receipt basis, whichever is earlier. You know that income under the head income from house property is taxable on accrual basis. Profits and gains of business profession is taxable based on method of accounting followed by SSE. Similarly, what is the taxability criteria for income from salaries? Taxability criteria for income from salaries income. Taxability criteria for levying tax on salary income is due or receipt, whichever is earlier. Tell me, do you believe that the word accrual, the word due and the word outstanding are same? Accrual, due, outstanding, are they same? Yes. The word accrual, the word due, the word outstanding, are they same? No, they are not same at all. They are not same. Their accounting effect was same. In your 12th standard final account chapter, in the adjustment, if it was written wages accrued, wages due, wages outstanding, for everything used to give the same effect, add to wages balance sheet liability side. The accounting effect of accrual, due and outstanding is same. But the word accrual, word due and word outstanding are different. For example, here there is a switchboard. If I on that switch, then AC will be on. If I on the switch, then AC will start. If the AC starts, some power will be consumed. Electricity will be consumed. Does that mean that at the end of the day, I will go to the electricity company and ask, oh, I have on the AC today, I have on the lights today, so tell me what is the amount to be paid? Will I go there? Answer is no. Will they come to me saying that no, today you have switched on the AC and light, this amount you have to pay today? No. Why no, Because this electricity expense is just accrued. It is just accrued. Now, once in a month, they will send us the bill. Once in a month, they will send us the bill. On that bill, they will mention the due date. On that date, that electricity bill will become due. I have to make payment by that date. So that amount will become due only on that date. Before that date, they cannot ask money from me. So that expense will become due on that particular date. And thereafter, if I don't pay, then it would be considered as an outstanding expense for me and outstanding income for the other person. So the word accrual, word due and the word outstanding are totally different. They are totally different. For example, India is an agricultural country. Let me give an example relating to agriculture. Say for example, there is a mango tree. Mango tree. See, mango, the one fine day, a bigger size mango will not appear on the tree. First of all, it will be very raw mango, green colored. Slowly, size will increase, color will change. So on daily basis, there is accrual. One fine day, if you don't pluck the mangoes from the tree, it will automatically fall. Once the mango is ripe totally, if you don't pluck from the tree, it will automatically fall on the ground. That is the due date. That is the due date. Thereafter, you pick up the mangoes, put it in your cart. That is the receipt. So, accrual happens on a daily basis. Due means due happens on a particular date. Thereafter, it is outstanding. Thereafter, it is outstanding. Let me give you one example of income. One example of income. Say, for example, Manoj has completed his chartered accountancy and he is being appointed as an in ICICI Bank to work for them. His remuneration, his salary is 1 lakh rupees per month. His salary is 1 lakh rupees per month. His package is 12 lakh rupees per annum. So Manoj has gone to ICICI Bank as an employee for first day. Today it is his first day in office. So today Manoj is introduced to all the employees there. Manoj is shown this is the work you are supposed to do, this is the manner in which you are supposed to do. Manoj's boss, he will take him to all his colleagues, get the introduction done, etc. Then Manoj will start working. Now day 1 has ended. Day 1 has ended. Manoj is going in the cabin of his office. Manoj is going in his office cabin where his boss is sitting. And on the table there is a calculator. So Manoj is picking up the calculator. Sir, my yearly remuneration is 12 lakhs. So divide by 12, monthly is 1 lakh. Oh, 4 days in a month there is a holiday, Sunday. And at least you have 1-2 holidays. So on an average, I'll be working for 25 days in a month. So 1 lakh is my remuneration per month. Divide by 25 days. 4,000 it is. Oh, give me 4,000. Today I worked, give me 4,000 rupees. Will he get 4,000? His boss may slap him 4,000 times. Why? Hasn't he worked? No, he has worked. Hasn't he earned? He has also earned. But what has happened? Only accrual has happened. Accrual. Salary he has just earned. It is accrued, but it is not due. It will become due on a particular date. That date will be clearly mentioned in his appointment letter. If he doesn't receive salary on that particular date, thereafter it will become outstanding. Outstanding income for Manoj and outstanding expense for the ICICI Bank. Have you understood this? So accrual happens on a daily basis, due happens on a particular date. So income from salary is not taxable on accrual basis. It is taxable either on due basis or receipt basis. Receipt means receiving money. Receipt means actually receiving money. So we say that income from salary is taxable either on due basis or on receipt basis, whichever is earlier. Salary due in the previous year is taxable irrespective of whether it is received or not in that year. Because we levy tax on whichever is earlier event. Normally what will become earlier? Due will come earlier. Receipt will be later. So normally on due only tax will be levied. Generally salary will become due earlier and it will be received later. So tax will be levied when the salary is due. But sometimes salary may be received but it is not due. For example, you are taking up advance salary. In the month of March, you are going to your office, you are asking a boss to pay you 2 months salary in advance. So right now it is the month of March 21, for example. In the month of March 21, you are asking your company to give an advance salary for April 21 and May 21. So in the month of March 21, you received the salary of April 21, May 21 in advance. Have you worked for that 2 months salary? No. Do you believe that salary is accrued? No. Do you believe that salary is due? No, it is just received. Will it become taxable? Yes. Why? Because tax is levied either on due or on receipt, whichever is earlier. So in case of advance salary, the receipt is earlier than due, so you have to pay tax on receipt. So conclusion is you have to pay tax either on due basis or on receipt basis, whichever event takes place earlier. Now the question is, receipt means actually receiving money, that's all. But what do you mean by due? When my salary will become due? When my salary will become due? Salary becomes due as per terms mentioned in contract of service. In your employment contract, it will be clearly written when your salary is going to become due. Terms mentioned in the contract of service can fall either into case 1 or it can fall into case 2. What is case 1? Salary becomes due on last day of the month. Salary becomes due on last day of the month. In your appointment letter, if it is written that your salary will become due on last day of the month, what is the meaning of this? Your previous year is 2021. You have worked for 12 months. You have worked for 12 months. Salary of the month of April will become due on last day of the month, that is 30th of April. Salary of the month of May will become due on last day of the month, that is 31st May. Similarly, salary of June will become due on 30th June. Salary of July will become due on 31st July. August salary will become due on 31st August. September's salary will become due on 30th September. October, November, December, Jan, Feb, March. So salary of respective month will become due in the respective month only. If your appointment letter says that your salary becomes due on last day of the month, means your salary will become due in the same month in which you have rendered the services. Are you understanding? In that case, we say that your service period is April 20 to March 21. Your service period, you have rendered the services for the period April 20 to March 21. And during this period of April 20 to March 21, your salary has become due for which period? Your salary has also become due for April 20 to March 21 period only. So in this first case, now your service period and salary due period is same. Your service period and salary due period is same. Let's move on to the second case. Let's move on to the second case. I'll give you a break sharp at 11:30. Right now it is 11:27 in my watch. I'll complete this case 2 and then we'll have a break of 30 minutes. Case 2 says salary becomes due on first day of next month. What is the meaning of this? You have worked for the month of April. Salary for the month of April will become due on 1st of May. You have worked for the month of May. Salary of the month of May will become due on 1st of June. You have provided services for the month of June. Salary of June will become due on 1st of July. Similarly, salary of July will become due on 1st August. Salary of August will become due on 1st September. Salary of September will become due on 1st October. Salary of October will become due on 1st November. Salary of November will become due on 1st December. Salary of December will become due on 1st January. Salary of January will become due on 1st of February. Salary of February will become due on 1st March. Salary of March will become due on 1st April next year. Salary of March will become due in 1st April next year. So will it become taxable in current year or will it be taxable in the next year? Definitely it will become taxable in next year because it has not become due in the current year. Mr. Deva Salary is taxable on which basis? Due or receipt, whichever is earlier, na? Yes or no? And your appointment letter says what? When your salary will become due? Your appointment letter says salary will become due on first day of next month. So if you have worked for the month of March, salary for the month of March will not be due in the month of March. It will become due on 1st April of next year. So my question to you in this second case is, Deva, have you understood this? First of all, tell me, have you understood this? Salary of the month of March will become due on 1st of April. Means you are not going to ask your employer to pay you salary in the month of March because it has not become due. It will become due in the month of April. Now my question to you is, you have worked for how many months? You have worked for how many months? Definitely you have worked for 12 months, April to March. During this period of 12 months, salary has become due for how many months? March's salary will become due in the month of April next year. Does that mean in the current year, in this year, previous year 2021, only 11 months salary will be taxable? Is that the meaning? Do you believe so? If yes, you are wrong. Why? Because salary of the month of March of last year also month of March you might have worked, na? Salary for the month of March of last year will become due on 1st April in the current year. Will become due on 1st April in the current year. Are you understanding? So here your service period is April 20 to March 21. Your service period is April 20 to March 21. During this period of April 20 to March 21, your salary is becoming due for the period March 20 to February 21. During the period April 20 to March 21, your salary is becoming due for the period March 20 to February 21. So during the financial year 2021, your salary for the period starting from March 20 ending at February 21 is becoming due. Have you understood this? Have you clearly understood the difference between case 1 and case 2? So let us proceed. Before the break, we understood that there are two possibilities. Possibility number 1, your salary can become due on last day of the month, or your salary can become due on first day of next month. See, irrespective of whether your salary becomes due on first day of next month or fifth day of next month, the point is it is becoming due in the next month. So whether it is first day of next month, second day of next month, fifth day of next month, it doesn't make any difference. It will fall into second case. So broadly there are two cases. Case 1, your salary becomes due in the same month, and case 2, your salary becomes due in next month. So when your salary becomes due in the same month in which you have rendered the services, your service period and salary due period will remain the same. Your service period and salary due period will remain the same. But if salary becomes due next month, then your service period will be different, salary due period will be different. In case 2, my salary becomes due on first day of next month. So my service period is April 20 to March 21, that is my previous year 2021. But my salary due period is March 20 to February 21. My salary due period is March 20 to February 21. Now you may think that whether the salary due period is April 20 to March 21. You may think that irrespective of whether the salary due period is April 20 to March 21, whether the salary due period is April 20 to March 21 or it is whether it is April 20 to March 21 or whether it is March 20 to February 21, it will not make any difference because here it is April 20 to March 21, it is 12 months, and here it is March 20 to February 21, this is also 12 months. So what difference does it make? It is one and the same because ultimately you are taking salary for 12 months, whether it is April to March or whether it is March to February, it is 12 months only. So answer should remain the same. Do you believe answer will remain the same? You may believe so, but you are wrong. So I am sharing with you three situations. In which in second case your answer will change. I am sharing with you three situations in which in second case your answer will change. For example, left hand side I have three situations. Situation 1, situation 2, situation 3. S1, S2, S3 I have denoted. Rizwan, who told you he is not employed in the month of March 20? If someone is employed in April 20, it is implied that he would have been employed in March 20 also. So he was employed in the month of March 20, that is what is the assumption. If he is not employed in the month of March 20, they will clearly give you that information in the question. If they are not given the information in the question, meaning thereby he is employed in the month of March 20. Rizwan? Okay, let us proceed. First case says, salary of Mr. X is 50,000 per month and Mr. X left employment on 30th June 20. Mr. X left employment on 30th June 20. So he has worked for the month of April 20, May 20, June 20, and 30th June 20 he has left the employment. So now there are two cases. Case 1, salary becomes due on last day of the month. Case 1, salary becomes due on last day of the month. 30th June 20, you have left the employment. Your salary is becoming due on last day of the month. So for the month of April, your salary will become due on 30th April. For the month of May, salary will become due on 31st May. For the month of June, salary will become due on 30th of June. So you have worked for 3 months and during those 3 months, salary has become due for that 3 months only. So your salary is say 50,000 per month. Then it is multiplied by 3 months. Your answer is 1,50,000. Your answer is 1,50,000. Second case is salary becomes due on the first day of next month. April's salary will become due in May. May month's salary will become due in June. June month's salary will become due in July. Don't think that your left employment on 30th June means your salary of June will become due in June. No, your salary of June will become due in July only. No, but I have left the organization. How I will get the salary? Don't think about that. Nowadays, you are having bank accounts. Your employer would transfer the salary in your bank account in the month of July only. So you need not go to office to collect the salary. So salary of June will become due in the month of July, even if you have left the employment in the month of June. And salary of last year of the month of March will become due in the current year in the month of April. So in current year, you have worked for 3 months, April, May and June. But in current year, your salary is becoming due for 4 months. April's salary is becoming due in May, May's salary is becoming due in June, June's salary is becoming due in July, and last year, March's salary is becoming due current year in the month of April. So your salary due period is March 20 to June 20. March 20 to June 20. Here it is April to June 20. Here is March 20 to June 20. So it is 50,000 per month multiplied by 4 months. That is 2 lakhs. 50,000 per month multiplied by 4 months, that is 2 lakhs. Have you understood the first situation? First situation, have you understood? Any one of you are thinking that who is going to pay me salary for 4 months? I have worked for only 3 months. Why my employer will pay me salary for 4 months? I have worked only for 3 months. Are you thinking in this manner? If yes, you are wrong. Why? You have worked for 1 month in the last year, yeah? For 1 month you worked in the last year and you did not receive the salary because your salary was not due in the last year. So it is not that you are working for 3 months and getting the salary of 4 months. Don't think about it. Don't think in this manner. In the month of March last year you worked, na? That March month's salary you did not receive. So you have worked for 4 months, you are receiving salary for 4 months, and that 4 months salary is becoming due in this year only. Yes, is that very, very clear? Only 2-3 people are responding. What about others? Yes, okay. Let's move on to second situation. Situation 2 says salary of Mr. X is 50,000 per month. Mr. X joined the employment on 1st January 21. So he has joined the employment on 1st January 21. So he has joined a new employment. If his salary is 50,000 and in his appointment letter it is written that your salary will become due on last day of the month, then what will happen? Salary of the month of January will become due on 31st January. Salary of the month of February will become due on last day of February. Salary of the month of March will become due on 31st of March. So, during the period January to March, salary of 3 months is becoming due. So, it is 50,000 into 3 months. That is 1,50,000 will be your answer. What if your salary becomes due on first day of next month? Then salary for the month of January will become due in the month of February. Salary for February will become due in the month of March. Salary for March will become due in the month of next year's April. When it will become taxable? Next year April. So in current year you have worked for 3 months. But during these 3 months, your salary has become due only for 2 months. So your answer will be, your salary due period is January 21 to February 21, 50,000 per month multiplied by 2 months, that is 1 lakh. See, in second case, your answer is changing as compared to the first one. Is that very, very clear? Yes or no? Let's move on to the third case. Salary of Mr. X is 50,000 per month during the period April 20 to September 20. So April 2020 to September 2020, your salary is 50,000 per month. And from October 20 onwards, it is increased to 60,000 per month. So April to September salary is 50,000 per month. October to March salary is 60,000 per month. What will be the answer if your salary becomes due on last day of the month? Move on to case 1. April salary will be 5050, will become due in the month of April. May 50, June 50, July 50, August 50, September 50. Correct? From October onwards, your salary is 6060. So salary of October will become due in the month of October 60, November 60, December 60, January 60, February 60, March 60. What will be your answer in this case? 50,000 is your salary. for the period April to March. So 50,000 to 6. And then 60,000 to 6. 50,000 to 6 is how much? 3 lakhs. And 60,000 into 6 is 3 lakh 60. 3 lakh plus 3 lakh 60 is 6 lakh 60. Tell me, have you understood this? Yes. Now let's move on to the second case. What if your salary becomes due on first day of next month? What if your salary becomes due on first day of next month? Salary of April will become due on 1st May. This is 50. Salary of May will become due in the month of June. That is 50. Salary of June will become due in the month of July. That is 50. Salary of July will become due in the month of August. That is 50. Salary of August will become due in the month of September. That is 50. Salary of September will become due in the month of October. This one is also 50. Salary of October will become due in the month of November. That is 60. 60. October onwards it is 60. Salary of November will become due in the month of December. 60. December salary will become due in January. That is 60. January salary will become due in February. 60. February salary will become due in month of March. 60. Then March salary will become due next year. Next year. So this is not taxable. This is not taxable in the current year. Last year March salary will become due in current year's April. How much? Definitely 5050. So what will be your answer? What into what? 50,000 to how many months? 50,000 to 7 months. And 60,000 to 5 months. Yes. So 7 months into 50,000, 3 lakh 50. 6 lakhs, 60,000 to 5 months, 3 lakhs. So what is the answer? 6 lakhs 50. Are you understanding this? Yes or no? Okay. So answer here for situation 3, case 1, it is 6 lakh 60. Case 2, when your salary becomes due on first day of next month, it is 6 lakhs 50. Is that very, very clear? So here we have understood how to get the amount of salary in two different situations. One, when your salary becomes due on last day of the month, and another situation is when your salary becomes due on first day of next month. When your salary becomes due on last day of the month and when your salary becomes due on first day of next month, how to get the amount of salary that you have understood in this example. There are three different situations. I have discussed all these situations with you. So with this section 15 charging section comes to an end. Section 15 charging section comes to an end. Now we'll proceed further. We have section 17 subsection 1 meaning of salary. I am not going to discuss anything out of this section 17 subsection 1 because on each and every point we are going to discuss, we are going to have a detailed discussion. On each and every point we are going to have a detailed discussion. So at the end of the chapter, you can come here and refer section 17 subsection 1. You will, at that point of time, you will come to know that every point is very much clear. Because by that time, we might have discussed everything in detail. Now, I am keeping in front of you the format for computation of income from salary. Here we have the format for computation of income from salary. See, income from house property chapter had a specific format for computing income. Similarly, here also we have a specific format for computing income. In this, we have different components of salary. Number one is basic salary. We'll have a separate discussion on it. Number two is allowance. Number three is perquisites. Number four is profits in lieu of salary. If you add these four things, the amount which is arrived is called as gross salary. From that gross salary, you will get deductions under section 16. You have three deductions. Section 16 clause 1A standard deduction. Section 16 clause 2 deduction for entertainment allowance. And section 16 clause 3 deduction for profession tax. In the chapter of income from house property, you had section 24, which was giving you deduction. There you had two deductions. Section 64 clause A standard deduction and section 64 clause B deduction with respect to interest on loan taken for acquisition, construction, repairs, renovation or reconstruction of property. So there you had two deductions, section 24 clause A and section 24 clause B. Here you are having three deductions, section 16 clause 1A, clause 2 and clause 3. The moment to deduct these three deductions, the amount which is arrived is called as income from salaries. The amount which is arrived is called as income from salaries. See, this part of the format, this part of the solution, the format will remain the same. So below the line, below the gross salary, deduction, you should put it in order only in the solution. First you should deduct standard deduction, then you should deduct entertainment allowance deduction, then you should deduct profession tax and get the amount of income from salary. Above that, there is no fixed format here. There is no fixed format, but generally we write basic salary first. Generally we write basic salary first and then we write the solution, we make the solution in the order in which it is given the question. So whatever order is given the question, just follow that order and make the solution. So above the line there is no fixed format, below the line there is a fixed format. Now we'll have a detailed discussion on basic salary. We'll have a detailed discussion on basic salary. First of all, friends, what do you mean by basic salary? What do you mean by basic salary? Basic salary is nothing but minimum amount of salary which every employee would receive from employer. The word minimum does not mean a particular amount. Minimum means some fixed amount. When you join a job, when you join an employment, in your appointment letter it will clearly mention what is the amount of your basic salary. That minimum fixed amount of salary which you will receive every month, that is called as basic salary. Based on that basic salary only, your retirement benefits like provident fund, gratuity, all these things will be computed. When you retire, you are going to receive gratuity, you are going to receive the amount of provident fund, etc. How much amount you will receive on retirement? That will depend upon two factors. Number one factor is, what is the amount of your basic salary? What is the amount of your basic salary? And number two factor is, what is the length of your service? What is the period for which you have entered the service? Now, let me explain you. Say for example, Manoj and me both are working in the same office. We both have joined the employment on the same date. We both are retiring on the same date. But I was working at a higher designation. My basic salary was 50,000 per month. Manoj was working at a lower designation. His basic salary was 30,000 per month. So at the time of retirement, who will receive more gratuity? Who will receive higher amount of provident fund? Definitely I would receive. In my case and in Manoj's case, tenure of service, period of service remains the same. But since my basic salary is more, I would receive more retirement benefits. One more example. For example, we both are working in the same office. My basic salary is 50,000. His basic salary is also 50,000. I am retiring after working for 40 years, whereas Manoj is retiring after working for 30 years. Who is going to receive more gratuity? Who is going to receive more retirement funds in the nature of provident fund, etc.? Definitely I will receive more. Why? Because the length of my service is more. Length of my service is more. So how much amount you will receive in the form of retirement benefits like gratuity, provident fund, etc. That depends upon two factors. Factor number one, what is the length of your service? Longer the duration of service, more the retirement benefit you are going to receive. And factor number two is your basic salary. Factor number two is your basic salary. So here I have explained you two sentences. I have explained you two sentences. Number one, basic salary is minimum amount of salary which every employee would receive from employer. Basic salary is a fixed amount of salary which every employee would receive from employer. Number two, based on the basic salary, retirement benefits will be computed. Based on the basic salary, retirement benefits will be computed. Have you understood these two points very clearly in connection with basic salary? Yes or no? Each one of you should respond. If you have not understood, drop me the doubt. If you have understood, drop me the message saying that yes. Okay, let us proceed further. So number one, I have explained you meaning of basic salary. Number one, I have explained you meaning of basic salary. Basic salary is minimum amount or fixed amount of salary which every employee will receive from employer, and based on the basic salary, retirement benefits will be calculated, will be computed. Now I am moving on to second point in connection with basic salary only. I am moving on to second point, that is gross basic salary versus net basic salary. Gross basic salary versus net basic salary. I have taken an example here. Say for example, Manoj has completed his chartered accountancy. He has joined in employment with ICICI Bank. His salary is fixed at 50,000 rupees per month. So this 50,000 per month is called as gross basic salary. He is not going to do you believe after 1 month he will receive 50,000 in his bank account? Manoj has joined an employment. In his appointment letter, it is written that your monthly salary will be 50,000. Does that mean that he would receive 50,000 in his bank account at the end of the month? Answer is no. From that 50,000, lot of amounts will be deducted. There are compulsory deductions. For example, income tax will be deducted, which is called as TDS, tax deducted at source. So from his gross basic salary, his employer will deduct TDS, income tax, and this income tax his employer will pay to the central government. Number two, profession tax will be deducted by his employer from his salary. And this profession tax is a tax on employment. It will be paid to the state government. It will be paid to the state government. You also know that there is something called as provident fund. Provident fund is what? Provident fund is retirement benefit given by the employer to the employee. In that provident fund, employer, employee both will contribute. That provident fund you might have heard for the first time in your life, maybe in 12th standard accountancy subject. But you know that provident fund is a retirement benefit, retirement fund created by the employer, in which every month employer, employee both will contribute certain amount. Both will contribute certain amount. How employee will contribute? His contribution, employee's own contribution, how he will give? Will he give money from his own pocket? Answer is no. That amount will be deducted from his salary. employee's contribution to this provident fund, retirement fund, will be deducted from his salary. So say for example, 4,000 is deducted as employee's contribution to provident fund. Another possibility is, say for example, Manoj is in need of funds. Manoj is in dying need of money. So what he has done, he has gone to his employer ICICI Bank and he has asked ICICI Bank to pay him 2 lakh rupees. He says that give me 2 lakh loan, I will repay in future. So this 2 lakhs which Manoj has received from ICICI Bank is not an income, it is a liability, it is a loan. Now the bank says, how you are going to repay this? So Manoj says, at the end of every month when I receive the salary, from that salary you go on deducting 10,000 rupees. You go on deducting 10,000. So his employer says, let me deduct 10,000 rupees. So he is deducting all these things and finally he is paying 33,800 to Manoj. So what is being credited to the bank account of Manoj is 33,800 rupees. This 33,800 is called as net basic salary. It is called as what? Net basic salary. And 50,000 is called as gross basic salary. Now my question to you is, which basic salary is taxable? Net basic salary is taxable or gross basic salary is taxable? Answer is gross basic salary is taxable. Answer is gross basic salary is taxable. Gross basic salary is taxable and not the net basic salary. If the examiner doesn't give you gross basic salary in the question, if he gives you net basic salary, then what? Then you will have to add back all these amounts to the net basic salary. You will have to add back all these amounts to ascertain the amount of gross basic salary. So you will take up 33,800, to that you will add 10,000, 4,200, 2,000, all these things will be added. All these things will be added and gross salary will be found out. Once you get the amount of gross salary, that is 50,000 rupees, then you will calculate his income. 50,000 per month multiplied by 12 months, that is 6 lakhs. Now you may think, sir, this income tax is already deducted by employer. No? Income tax is already deducted by employer. If you levy tax on gross basic salary, then it will amount to double taxation because already tax is deducted. Already tax is deducted. 2,000 per month tax is being deducted from my salary every month. If you levy tax once again on the amount of gross salary, that would amount to double deduction. Answer is, will not allow double deduction situation to arise. For example, your gross basic salary is 50,000. So we'll take into 12. So that will be 6 lakh rupees. Now say for example, this itself is the amount of salary. To that we will add income from house property, profits and gains of business profession, capital gains, other sources. Then we will get gross total income. If you recollect this from the chapter of basic concept, you calculate the income in 5 heads of income. All the 5 heads of income, final amount you add to get the amount of gross total income. From there you deduct deductions. Deductions from section 80C to section 80U. Once you deduct this deduction, the balance amount of income which is arrived is called as total income. On that total income, you calculate tax liability. On that total income, you calculate tax liability. Now say for example, your total income is 10 lakhs. See, your salary income is 6 lakhs, but you might have other income, na? For example, your other incomes are also 6 lakhs. Then your gross total income is how much? 12 lakhs. And let me tell you that your chapter 6A deductions, your chapter 6A deductions from section 80C to section 80U is 2 lakh rupees. Then you will deduct this 2 lakhs and the balance income, taxable income is 10 lakhs. On that taxable income, you will calculate the tax liability. For calculating tax liability, first of all, you will calculate what? Basic tax. Basic tax is 1,12,500. To that, you will add surcharge if applicable. In this case, it is not applicable. You will deduct rebate under section 87, it is not applicable. So, you add health and education cess at 4%. That will be how much? 4,500. So, our tax liability would be 1,17,000. Now, what will happen now? From this tax liability, TDS deducted by employer. More precisely, we should use the word tax deducted by employer. Whatever tax is deducted by employer from your salary, that we should minus it. So, how much amount of tax he was deducting every month? In our example here, he is deducting how much? 2,000 every month. So, throughout the year, he might have deducted how much? He might have deducted 24,000. That amount we are going to deduct here. In other words, by levying tax on your gross basic salary, that doesn't tend to amount to double tax. Only for the purpose of computing your real income, only for the purpose of computing your correct income, we've taken into account gross basic salary. Then ultimately we'll calculate the total income. On that we'll calculate the tax liability. From the amount of that tax liability, we will deduct the amount of tax which is already deducted by the employer and paid to the government. This tax your employer has deducted now, and he will pay this to the government. He is not paying his own tax, he is paying his employee's tax. So credit should be granted for this. So you are supposed to pay only balance tax. How much it is? 93,000. This will be your tax payable. This will be your tax payable. So, this doesn't tend to amount to double taxation. Few of you might be had a doubt saying that this would amount to double taxation. Tax is already deducted. Why should I take into account gross basic salary? I think now those questions have come to a rest. Yes, is that very clear? So what is the conclusion? Which salary is taxable? Gross basic salary is taxable or net basic salary is taxable? Gross basic salary is taxable. Gross basic salary is taxable, not the net basic salary. Now my question to you is, the basic salary which is appearing here in point number A, the basic salary which is appearing here in this point number A is which basic salary? This is gross basic salary. This is gross basic salary. This is gross basic salary and this is gross salary. They are not one and the same. They are different. They are different. Gross salary means every benefit received from employer taken together. And gross basic salary is monetary amount received from employer. Fixed monetary amount received from employer every month. Yes? Is that very clear? Gross basic salary and gross salary are not one and the same, they are different. Yes or no? Gross salary is addition of everything. Monetary benefit received from your employer, non-monetary benefit received from your employer, you take into account everything to calculate the gross salary. So definitely gross salary is much wider term as compared to gross basic salary. Gross basic salary is a narrower term. It is just talking about gross basic salary only. But gross salary is a much wider term because it also includes non-monetary benefits received from employer. Gaurav is asking me, sir, items in the format are exhaustive? Answer is yes, they are exhaustive. If you have learned the chapter of income from salary in past, then you may think that, oh, I had seen a lot of points. Yes, you might have seen a lot of points. All those points are there here also in perquisites, in perquisites. Perquisites is a very big concept, section 17, subsection 2. In that, we have a lot of things. Look at this chapter. Just look at the beginning of the chapter. Perquisites. Section 17, subsection 2, clause 1, rent-free accommodation, clause 2, concession accommodation, 17 to clause 1, 2, 3, 4. 4 you are having A, B, C, D, E, F, G. Then you have 17 to clause 5, 6, 7, 7A, 8. Inside that point number 8, you are having point number 1, 2, 3, 4, 5, 6, 7, 8, 9. So at least there might be 20 points here itself. There might be 20 points here itself inside one word, perquisites. So answer is yes. On a overall basis, this is the format. But in this perquisite, you may have around 22 separate individual points. In profit stream of salary, you may have 6 different points. Is that clear? Deva says, sir, what do you mean by adjusted gross basic salary? No, I have not heard this word earlier in my life. Adjusted gross basic salary, I do not know what it is. I have not read that word anywhere. It is either gross basic salary or net basic salary or gross salary. The adjusted gross salary I have not heard. After making deductions, this is not adjusted gross salary. This is income from salary. From where you have picked up this word adjusted gross basic salary, I do not know. If you have come across any book, take the photograph of that paragraph or that format and send it to me. There is nothing called as adjusted basic salary or adjusted gross salary. Yes, shall I proceed? Yes or no? So we have discussed 2 points. Are you aware that we are still in the first point, basic salary? We are discussing this point A, basic salary. In that, we are discussing multiple points. First, we have discussed meaning of basic salary. Second point, we discussed gross basic salary versus net basic salary. Gross basic salary versus net basic salary. Now we are discussing third point, grade pay. What is grade pay? That we'll discuss. Deva, after making deductions from gross basic salary, we will get gross salary. That statement itself is incorrect. See, look at this format for computation of income from salary. I'll remove this for you. Deva, you don't deduct anything from your gross basic salary. This is your gross basic salary amount. In that you add allowances, point number B. In that you add perquisites, point number C. In that you add profits in your salary, point number D. Then you take the total of all this to arrive at the amount of gross. Are you understanding? If question uses the word basic salary, in the question they have given you basic salary. What does that mean? Is it a gross basic salary or net basic salary? Yes, in the question they are using the word basic salary. What does that mean? Is it gross basic salary or is it net basic salary? Answer is it is gross basic salary. If it is net basic salary, they will clearly use the word net here. If it is a net basic salary, they will clearly use the word net. If they are not using the word net, means it is a gross basic salary. It is a gross basic salary. Is that very, very clear? Okay. So let me move on to next point, that is grade pay. In connection with basic salary only, I am moving on to next point, which is called as grade pay. What do you mean by grade pay? Grade pay is nothing but annual increase. What is grade pay? Grade pay is nothing but annual increase, that is annual increment in the amount of basic salary. This is part of basic salary. It is nothing but the annual increment. See, in private sector, your annual increment is not fixed. It is not necessary that every year your salary will increase. It all depends upon your performance. If you don't perform well, then your salary may not increase. Instead of increasing, they may reduce also. But in case of government jobs, if you are into government job, then every year your salary will increase. Year after year, your salary will increase. And how much it will increase now, that is also known to you in advance. That is also known to you in advance. So government jobs or semi-government jobs, jobs in government companies, etc., salary will be known to you. Increment in the salary will also be known to you. For example, if you look at the in Times of India newspaper, Wednesday, you have the additional supplementary called as Times Classifieds. In that classifieds, if you refer, there might be advertisements for a lot of vacancies. So in that advertisement itself, they would give you the grade pay. In the advertisement itself, they will give you the grade pay. Meaning thereby, say for example, I have taken an example here to make you understand. Let us move on to that example. Mr. A has joined as an employee with Synergy Systems Limited in the grade of 10,000, 1,000, 14,000, 2,000, 28,000. What do you mean by this? Does that mean yes. Dikshit says, sir, in case of government and semi-government jobs, not only the increment in salary is known, what amount of pension you will receive after retirement, that is also known. And what is the amount of increment in pension, that is also known. Yes, everything is certainly known in case of government jobs. That is the reason people are dying behind the government jobs. Why people are running behind the government jobs? Number one, everything is known. Whether you work or you do not work, you are going to get the fixed amount of remuneration, and every year you will get fixed increment also. Irrespective of your performance, every year, slowly your salary is going to increase. Plus, you don't have to work. The biggest advantage, you don't have to work. No one is going to bother you. No one is going to monitor you. Do whatever you want to do. No one can throw you out of the job. That is the reason people are running behind the government jobs. Now say for example, this example says A joined as an employee of Synergy Systems Limited in the grade of 10,000, 1,000, 14,000, 2,000, 28,000. Means what? It does not mean that when you join an employment, your first month's salary will be 10,000, second month's salary will be 1,000, third month's salary will be 14,000, fourth month's salary will be 2,000, fifth month's salary will be 28,000, sixth month's salary is not known. This is not the interpretation. Here, range of salary is given to you. In this range, the smaller amounts, 1,000 rupees, 2,000 rupees. The smaller amounts are yearly increments. Means say for example, you are a fresher. This is your first job. In that case, your remuneration will start with 10,000 per month. Once you complete 1 year in that particular job, your remuneration will increase by 1,000 rupees. So it will be 11,000 next year. After 1 year, once again it will increase by 1,000 rupees. So it will reach to 12,000 per month. Then after 1 year, once again it will be increasing by 1,000 per month. So it will reach to 13,000 per month. Then after 1 year it will be 14,000 per month. Once you have reached 14,000, thereafter your remuneration will increase by 2,000. Not per month, these are per annum amounts. So once you reach 14,000, your remuneration will increase by 2,000 rupees. So next year it will be 14 plus 2, 16,000 per month. Once you complete 1 more year, then from 16 it will be 18,000 per month. So on and so forth. The smaller amounts in between, they are annual increment amounts. What if you reach 28,000? Before you retire, you reach 28,000. Then this grade has come to an end. Now you will be promoted by default. Well, without your performance, you will get a promotion. Because the grade has ended, by default promotion. So you move on to a different grade, new grade, higher grade. In that higher grade, annual increment amounts will be higher. Are you understanding? Okay. Now let us try to solve this. Example. It says Mr. A has joined as an employee of Synergy Systems Limited in the range of 10,000, 1,000, 14,000, 2,000, 28,000, and he has joined the employment on 1st January 19. If he has joined the employment on 1st January 19, he will complete 1 year in service on which date? He will complete 1 year in service on 31st December 19. Then after second year will start on 1st January 20, which will end on 31st December 20. It further says his basic salary at the time of joining was 11,000. At the time of joining the job, his basic salary was 11,000, meaning thereby he is not a fresher. He might be already having an experience of 1 year. That is the reason his salary is starting with 11,000. So his salary is starting with 11,000. Calculate the taxable amount of salary for the previous year 2021. When he has joined an employment, on 1st January 19. So from 1st January 19, for 12 months, that is up to 31st December 19, his salary will be 11,000 per month. 11,000 per month. He has completed 1 year in service on 31st December 19. So next year will start on 1st January 20. It will end on 31st December 20. During this period, his salary will increase by 1 more 1,000. It will be 12,000 per month. Then New year will start on 1st January 21, will end on 31st December 21. During this period, salary will be 13,000 per month. So on and so forth. There will be 14, then 16, 18, 20, etc. Now see, we are required to calculate the income for the previous year 2021. When we say previous year 2021, we are talking about the financial year starting on 1st April 20 and ending on 31st March 21. We are talking about the period starting on 1st April 20, ending on 31st March 21. We have to calculate income, declare income financial year wise. But here the annual increments are happening calendar year wise. So this calendar year wise information we have to convert into financial year. So calculation of salary income for the previous year 2021. Previous year 2021 will include 9 months of the year 2020. It will include 9 months of the year 2020 and it will include 3 months of the year 2021. Correct? 9 months of the year 2020 means from April 20 to December 20. Your remuneration will be how much during this April 20 to December 20? 12,000 per month. So it is 12,000 per month multiplied by 9 months. 12,000 per month multiplied by 9 months. Then January 21 to March 21. 3 months pertaining to the year 2021 falls in your previous year 2021. During the year 2021, your remuneration is 13,000 per month. So 13,000 per month multiplied by 3 months, it is 39,000. 12,000 per month into 9 is 1,08,000. 13,000 per month into 3 is 39,000. Then you take the total, it is 1,47,000. 1,47,000. Have you understood this very clearly? Grade pay. Grade pay is part of basic salary. It is nothing but annual increment in the amount of basic salary. The annual increment portion, you are separately identifiable. So that is called as grade pay. Is that very, very clear? We are still in the discussion of basic salary only. We are still discussing basic salary only. In this basic salary, till now we have discussed 3 points. Number 1, meaning of basic salary. Number 2, gross basic salary versus net basic salary. And number 3, grade pay. Okay. Deva is asking me question. Sir, if question is silent, if nothing is mentioned in the question, what do we presume? Our salary becomes due on last day of the month or salary becomes due on first day of next month? If examiner doesn't mention anything, then what? Then you have to definitely take an assumption that your salary becomes due on last day of the month. Then your assumption would be your salary will become due on last day of the month. Aditi madam says, sir, out of the range of increments, why did we choose list of 1,000? Why did not we choose 2,000? Madam, you have to go in ascending order. As and when you grow, as and when your employment period increases, your increment will also be more. So at initial stage, we will give you 2,000 per annum increment, and then at a later stage, we give you 1,000 per annum increment. That would be illogical. This range says what? From 10, you will be starting every year. Your increment will be 1,000 till you reach 14. Then your increment will be 2,000 every year till you reach 28. A smaller amount in between is an increment. I cannot say that your monthly salary is 1,000 per month and then it will increase by 14,000. That would be illogical, right? Aditi madam, can I say that your salary will be 1000 per month? So for 1 year your salary will be 1000 per month, then it will increase by 14,000. So next year it will be 15,000 per month. That is illogical. The smaller amount in between, these are annual increments. So in basic salary, I have discussed how many points with you? Number one, meaning of basic salary. Number two, gross basic salary versus net basic salary. Number three, grade pay, which is nothing but annual increase in the amount of basic salary. Now I move on to point four. Point four, advance salary versus advance against salary. Point 4 is nothing but advance salary versus advance against salary. What do you mean by advance salary? Advance salary means salary of future period received in the current period. My previous year for the purpose of examination is 2021. In the month of March 21, if I go to my employer and I say that, sir, I am in need of fund, please pay me salary for the next 2 months in advance. And he has agreed. In the month of March 21, he has paid me salary for the month of April 21 and May 21. Then I say that this is the advance salary. Advance salary, na, you know that salary will be taxed either on due basis or on receipt basis, which was earlier. In case of advance salary, receipt is earlier than due. Receipt is earlier than due. Will it become taxable? Definitely yes. Due or receipt which was earlier, receipt is earlier than due, it should become taxable. So advance salary is your income only. Advance salary is your income only. It is just that salary is received before it becomes due. It is your income, it should be taken into account. But advance against salary, na, advance against salary is not an income. It is a loan taken from your employer. See, you might have heard something. If I mortgage my property with the bank, and I get a loan, that loan is called as loan against property. So I have mortgaged my property with the bank and I have got the loan against that property. This loan is called as loan against property. Similarly, the words here are advance against salary. Means what? Means I have taken some loan against my future salary. So I have requested my employer to give me 2 lakh rupees because I am in dire need of funds. Say for example, some of my family member is hospitalized. I do not have sufficient amount of money. So I asked my employer to pay me 2 lakh rupees right now. And I said that from my salary you go on deducting 10,000 rupees every month and recover the amount of 2 lakh from me. So the amount of 2 lakh which is received by me, this is not a salary or advance salary. This is advance against salary. I have mortgaged my future salary. I have taken a loan. It is a loan. It is a liability. So advance salary is an income. It is taxable. But advance against salary represents a loan taken from employer. It is not an income. And since it is not an income, it is not taxable. But advance salary is a salary of future period received during the current period, that is previous year. In this case, salary receipt is earlier than due, it is taxable in the year of receipt. Is that very, very clear? Have you understood the clear distinction between advance salary and advance against salary? Yes or no? Yes. Now let's move on to the last point. Deva, I told you na, if nothing is mentioned, you should assume that salary is received at the end of the month. Yes. Oh, by mistake. Okay. Next. Last point in connection with, or maybe second last point in connection with basic salary, and that is foregoing of salary versus surrender of salary. What is this? Foregoing of salary versus surrender of salary. Foregoing. Foregoing of salary versus surrender of salary. Foregoing means to forego. Say for example, Manoj, we have Manoj. Where is Manoj? Manoj, he left. Manoj has left. Dikshit is asking me question, sir, can we deduct on monthly basis the amount repaid against the loan? What do you mean by that? I do not understand. Are you asking me that if you have taken a loan from your employer, how the employer is going to recover that amount back from you? Will he recover on a monthly basis from your remuneration, from your salary? That all depends upon you and your employer. What do you agree between each other? For example, you have taken a loan from your employer 2 lakh rupees and your employer says after 6 months you pay me these 2 lakhs. Understood. Advance against salary is a loan from employer. How you are going to repay that loan? It all depends upon the terms which is agreed between you and your employer. You may agree that you may ask your employer to deduct some amount of remuneration every month to recover the salary, to recover the loan. Or you may say that don't deduct anything from my salary. After 6 months, I'll pay you back the entire amount. So what are the terms? That all depends upon the employer and employee. Is that clear? Yes? Okay. Now, say for example, foregoing of salary versus surrender of salary, I am trying to explain you. Say for example, Manoj cleared his CA intermediate and he joined Big Four CA firm for articleship. He was focusing on gaining practical knowledge during articleship and he did not join any coaching class for CA final. He thought that I'll be in a position to manage. Then he took a leave of 3-4 months. He started studies. At that point of time, he realized that without a coaching class, I cannot refer to all the subjects. It is difficult to manage. So he appeared for the examination. Papers were not that good. He failed in CA final first attempt, both the groups. Second attempt also he failed. Third also he failed. So his journey has started May to May via November. So parents of Manoj, one fine day, parents of Manoj told him that you do one thing, forget about these small exams of life, you give the bigger exam of your life. And they got Manoj married. So Manoj is married now. He is cleared CA intermediate, he is doing a job. He is getting some decent amount of salary. And now CA final dream is far away. He is married, 1 year is over, he is having his first child, second year is over, second child, third year is over, third child. So year after year his liabilities are increasing, but his income is at the same level. Now he is frustrated with his life. So one fine day he goes to temple and he is requesting God that this time I am going to appear for my CA final. Please help me out to clear this examination. If I clear the examination this time, my 2 months salary I will donate to poor people. That is what Manoj promised to God. God also thought that no, this is a good deal. It appears to be a good deal. So God says, okay, you go prepare and appear for the examination. So Manoj went home, started preparing very seriously, appeared for the examination, and he cleared the examination. He cleared the examination. Everyone is happy. Manoj's wife is happy, parents are happy, father-in-law, mother-in-law, everyone is happy. Four children of Manoj are roaming here and there in the building saying that my father has become chartered accountant, he has passed. So, as promised, what Manoj has done now? Say for example, Manoj was working with Reliance Industries. After he became chartered accountant, he got a job in Reliance Industries. Now, Reliance Industries is having one organization, Reliance Foundation Charitable Trust. Reliance is also having one organization called as Reliance Foundation Charitable Trust. This charitable trust is engaged in charitable activities. Now Manoj has joined Reliance Industries. Manoj has called up the accountant of Reliance Industries saying that next 2 months salary, my next 2 months salary don't pay to me. You transfer these funds to Reliance Charitable. Reliance Charitable Trust. You transfer these funds to Reliance Charitable Trust. So Reliance Industries Limited, on instructions from Manoj, they are transferring 2 months salary to Reliance Foundation Charitable Trust. Now Manoj has worked for how many months? He has worked for 12 months. In his bank account, he will receive salary for how many months? He will receive salary for only 10 months. So Manoj has worked for how many months? He has worked for 12 months. But he has received salary for how many months? Only 10 months. So while you calculate his income from salary, you will take salary for how many months? Will you take salary for 10 months or will you take salary of 12 months? That is the question. Yes? Answer is you will take salary of entire 12 months. While you compute his income from salary, you will take salary of entire 12 months. Because salary of 12 months had become due. Salary of 12 months had become due. And salary is taxable either on due basis or receipt basis, whichever is earlier. So 12 months of salary is going to be taxed. Now next point is surrender of salary. Surrender of salary. Say for example, Manoj has learned Hindi. Manoj has learned Hindi. Whenever he is free, he will watch YouTube videos. So, one day he was going through the YouTube videos. He came across the video of Prime Minister and he heard what he says. In Lok Sabha proceedings, what he says now, Manoj went through the video. Manoj got motivated. He saw a few more videos of Prime Minister. And he felt that Prime Minister is working hard for the country. We should also work. We should also support the country. So what Manoj has decided now? Manoj has decided to give his 2 months salary to government of India, saying that use this 2 months salary for the development of our country. So Manoj, what he is doing now? His 2 months salary is transferred to government of India. He is transferred 2 months salary to whom? To government of India. Government was waiting for a person like him since last lot many years. So government would accept that 2 months salary from Manoj and government would issue him a certificate Felicitation, na? So Government of India felicitated Manoj and issued a certificate, thanksgiving certificate. These 2 months' salary is given to the Government of India. Now my question is, he has worked for how many months? He has worked for 12 months. He has worked for 12 months. But he received salary for 12 months, only 10 months. Why? Because he instructed his employer to transfer 2 months' salary to Government of India. Now, while you calculate his income from salary, you will be taking salary for how many months? You will be taking it only for 10 months. Why, na? Because this time 2 months' salary is given to government only. If you give 2 months' salary to government, on that also will they charge the tax? Instead of giving tax, we have given our entire income to government. Then on that income, don't expect us to pay tax, na? Are you understanding? So when you surrender your salary to Government of India, as per the Surrender of Salary Act 1961, then that amount of income would not be added to your income. So while we calculate your income from salary, we will be taking salary only for 10 months. Is that very, very clear? Have you understood the clear distinction between foregoing of salary and surrender of salary? Yes or no? Till now in my life, I have not seen any person surrendering his salary to the government. Now we move to the last point of basic salary. Still we are discussing what, na? We are still discussing basic salary only. The first point. Here till now we have discussed what? Number one, meaning of basic salary. Number two, gross basic salary versus net basic salary. Number three, grade pay. Number four, advance salary versus for advance against salary. This is number four. Number five, foregoing of salary versus surrender of salary. And number six, arrears of salary. Arrears of salary. Forget about arrears of salary. You tell me, what do you mean by arrears of rent? Income from house property chapter is over, na? There you learned, na, arrears of rent. What do you mean by arrears of rent? What do you mean by arrears of rent? See, Deva has given the answer, accrued but not paid. Mr. Deva, do you remember while teaching you house property chapter, I had told that you are going to do the mistake in future. So you have done the mistake at the same point. Arrears of rent does not mean rent accrued but not received. Arrears of rent means increase in rent with retrospective effect. Oh, Deva girl. Oh, I thought the boy. Now do you recollect? Yes, madam? Increase in salary with retrospective effect. So don't consider it to be outstanding salary. Don't consider it to be outstanding rent or rent accrued but not due. It is not. Arrears of rent means increase in rent with retrospective effect. Similarly, now if I ask you, what do you mean by arrears of salary? What do you mean by arrears of salary? Meaning is similar to arrears of rent. Arrears of salary is similar to arrears of rent. Means what? Arrears of salary is nothing but increase in salary with retrospective effect. Now you may think that, sir, in practical life, people's salary do not increase prospectively, where there is a question of increase in salary with retrospective effect. Tell me the organization in which the salary is being increased with a retrospective effect. Generally this would happen in case of government jobs. For example, the college faculties are semi-government employees. They are working in a college. Their salary has not increased, or they believe that their salary is too less. So they go on a strike. See, a lot of bank employees go on a strike. College teachers go on a strike. For what? For increase in salary. They demand an increase in salary. Now say for example, the college teachers went on a strike in the year 1819. Somehow the chief minister convinced them that we will ensure that your salary is increased. Will increase your salary. Go and work. Take the lectures. But chief minister convinced them. Later on their salary was not increased. In the next year 1920, once again they went on a strike. This time chief minister along with say chancellor of the university promised them that your salary will be increased. And state government issued a notification in the year 2021 that your salary is increased by 20% with effect from 1st April 20. Your salary is increased by 20% with effect from 1st April 20. Will they be satisfied with this notification? Definitely not. Why? They would ask the government, last 2 years, do you believe that we were practicing the strike? We were doing time pass. Our salary for 1819 as well as 1918 was also too less. So our salary should not increase with effect from 1st April 20. It should be retrospectively increased. So they forced the government to increase their salary on a retrospective basis. So government has increased the salary with retrospective effect from 1st April 18. Now say for example, during the financial year 1819 and 1920, salary was 50,000 per month. Salary was 50,000 per month. During this period, salary was 50,000 per month. It will increase by 20%. It will increase by 20% means what? Your salary 2021 will be how much? 60,000 per month. Correct? And last 2 years also, you are going to get 10,000 per month extra. Last 2 years also, you are going to get 10,000 per month extra for how many months? 24 months. So you will get how much extra? 2,40,000. You are going to get extra 2,40,000. This 2,40,000 is called as arrears of salary. This 2,40,000 is called as what? Arrears of salary. So this 2,40,000 is increase in salary with retrospective effect. Have you understood this? Now refer this, what this provision says. If arrears of salary were not taxed in earlier years on due basis, if they were not taxed on due basis, they will become taxable in the year of receipt. If the arrears were not taxed on due basis, they will become taxable on receipt basis. Opposite sentence also they are saying, if arrears were taxed on due basis, then they will not become taxable when it is received. Oh, so that is implied. Taxes should be levied only once, na? Tax cannot be levied twice. So when tax should be levied? Either on due basis or on receipt basis, which one is earlier. So, if on the amount of arrears, if you had already paid tax on due basis, no tax on receipt basis. If you had not paid any tax on the amount of arrears on due basis, tax will be levied on receipt basis. Now you may ask the question, what if the law is silent? Means, what if the question is silent? In the question, in the examination, question is silent with respect to whether the tax is paid on the amount of arrears in the past or not. In that case, you need to take an assumption that no tax was levied on the amount of arrears of salary in the past years. Therefore, it will become taxable right now in the current year when it is actually received. So, if the question is silent, then arrears will become taxable in the year of receipt. Is that very, very clear? Yes or no? Have you clearly understood this? Yes? Now, before I move on to the next topic, let me take up one small point. See, our discussion right now is going on only for the first point, that is basic salary. Lot of points we have discussed here. We have discussed lot of points. Now, I want to discuss one point with you, and that is called as bonus. Bonus. Have you heard bonus? Nowadays, in practical life, no one is going to receive a Diwali bonus. In practical life, people do not receive Diwali bonus. In olden days, people used to get 1 month's salary extra in the form of Diwali bonus. Nowadays, there is nothing called as Diwali bonus. In corporate world, there is something called as performance bonus. In corporate world, there is something called as performance bonus. For example, Manoj is working with, say, Reliance Industries Limited, and in the appointment letter, it is written that Manoj's CTC is 12 lakhs per annum. Do you understand CTC? CTC means cost to the company. CTC means cost to the company. If Manoj's CTC is mentioned as 12 lakh per annum in his appointment letter, that doesn't mean that he will receive 1 lakh per month in his bank account. This 12 lakh per annum includes a performance bonus of 3 lakhs. Includes a performance bonus of 3 lakhs. So how much amount is going to receive per month? That will be calculated based on 9 lakhs per annum, not 12 lakhs per annum. So 9 lakhs divided by 12, 75,000. From that 75,000, income tax will be deducted, profession tax will be deducted, PF contribution will be deducted. After all those deductions, he would receive the balance amount. This 3 lakhs is a performance bonus. This 3 lakh he would receive only after he performs and once his performance is evaluated. This 3 lakh he would receive only after he has performed and his performance is evaluated. For example, previous year 1920, whatever work he has done in the previous year 1920, that work will be evaluated. There will be a performance evaluation. There will be a performance evaluation. In which year? In the next year. Performance evaluation in which year? In the year 2021. So in the year 2021, his company will give him a rating. When you go to watch a movie, every movie is also rated 5-star, 4-star, 3-star, etc. Similarly, his company will rate him. Company will provide him a rating as to how he has performed in the financial year 1920. Rating can be practically, this is the rating in corporate life. First rating means they call it as FEE. Oh, all these things are not written in the notes. This is only for your knowledge. No one is going to ask you. Second rating is EE. Third rating is ME. Fourth rating is BE. Fifth rating is NME. First rating means what now? First rating means far exceeded expectation. Far exceeded expectation means you have worked much better than our expectation. You have performed exceedingly well. So we call it as far exceeded expectation. In that case, you may believe that you will receive the entire amount of 3 lakhs of performance bonus. The answer is no. Because how much amount of performance bonus you will receive now, that will depend upon your performance as well as company's performance. If the company is into losses, even if your performance is better now, you are not going to receive any bonus because company is anyway into losses. So how much amount of bonus you will receive will depend upon 2 factors. What is your performance and what is the company's performance. So it is a multiplier effect of both. So first rating is far exceeded expectation. Second rating is exceeded expectation. Means you have worked well, you have met the employer's expectation, you have worked better than the employer's expectation. Third is met expectation. Means you have worked as per our expectations only. You are not exceptionally well, but you have worked as per our expectations, we are satisfied. Fourth is below expectation. No, you have not worked properly. Not good. You don't have adequate experience. So that is called as below expectation. Fifth is called as not met expectation. Not met expectation means your performance is worst. It is also called as time for resignation. If you don't resign, company will throw you out. So there are 5 different ratings. For example, your rating is 1. You have got a rating of 1. So you are a star performer. In that case, out of 3 lakhs, say for example, company has given you 2.5 lakhs bonus. Company has given you a bonus of 2.5 lakhs. But how much you will receive out of these 3 lakhs? Will it be decided in 1920 or it will be decided in 2021? It will be decided in 2021 because performance evaluation of 1920 will happen in the year 2021. So definitely no one would like to pay tax on these 3 lakhs in 1920 because it is not certain how much amount is going to receive. So this 3 lakhs, which is the performance bonus, will become taxable on receipt basis. Will become taxable on which basis? Receipt basis. Have you understood this? Yes? So performance bonus is taxable on receipt basis. If in the question the word bonus appears, so take it, that should be taxed on receipt basis. Is that very clear? With this, our discussion with respect to basic salary is over. Our discussion with respect to basic salary is over. Now we move on to second point, that is allowance. See, allowance starts on page number 41. Page number 41, here the topic is starting. Half page, page number 41 and page number 42 entire. This is allowance only. This 1.5 page is summarized here for you in the form of flow chart. In the form of flow chart, this is summarized. I'll be explaining you all the points from this flow chart only. Day before examination also you should refer to this flow chart only. So, we are into a next topic, fresh topic called as allowances. In this allowance, we need to understand three things. Number one, what is the meaning of allowance? What is the meaning of allowance? Number two, what is the classification of allowance? Classification of allowance. And number three is taxability of allowance. Taxability of allowance means whether allowance will become taxable or not. So, this topic of allowance we need to understand. Our discussion will be bifurcated in three parts. Number one is meaning of allowance. Number two is classification of allowance. Classification. And number three is taxability of allowance. Number three is taxability of allowance. First of all, let's move on to the smallest one. By default, it has to be meaning of allowance. What do you mean by allowance? What do you mean by allowance? Basic salary, I told you, no? Basic salary is minimum amount of salary or fixed amount of salary which every employer will pay to the employee. Basic salary is paid for providing the services. Similarly, what do you mean by an allowance? Allowance means fixed amount of money. Allowance means fixed amount of money given by employer to employee along with the basic salary. Means you will receive the basic salary, you will also receive the allowance. So, allowance is a fixed amount of money given by employer to the employee every month along with basic salary. Then what is the difference between basic salary and allowance? Both are received every month. Then what is the difference? Every employee will receive the basic salary, but everyone may or may not get the allowance. Allowances are fixed amount of money given by the employer to the employee for a particular purpose. For a particular purpose. For example, I am working as a sales executive. I am working as a sales executive means my nature of job is not such that I'll go in office and I'll sit in front of computer. I'm working as a sales executive means I have to travel a lot. If my salary is say 50,000 per month and if I spend 30,000 rupees per month for traveling, and if they are expecting me to bear this traveling cost, I will leave the job and I'll run away. So my salary is 50,000. I am working in a sales team. I'll be always on the field. I will not sit inside the office and work. I'll always be on the field. I'll go and meet different customers. I'll incur a lot of amount on traveling. So to compensate that amount, employer may give me something called as traveling allowance. To meet the cost of traveling, employer may give me some amount called as traveling. On the other hand, say for example, Manoj is a chart accountant, he is working in an office. So morning he reaches his office, works there for 6 hours, 8 hours, 10 hours and he comes back. So his nature of job is not demanding any traveling. So he is not going to receive any traveling allowance. So moral of the story is, what is the difference between a basic salary and an allowance? Every employee will receive basic salary, but every employee may or may not receive the allowance. Allowances are given to employee based on the nature of job, requirement of the job. If the nature of job is such that it involves a lot of traveling, then traveling allowance will be given. Otherwise, it will not be given. Is that very, very clear? So, allowance is fixed amount of money given by employer to the employee to meet certain expenses. Allowance is fixed amount of money given by employer to the employee to meet a certain expenses. So, this is the meaning of allowance. Next is classification of allowance. Classification of allowance, we can classify the allowance into two categories. Number one, allowance given for official purpose. Allowance given for official purpose, and number two, allowance given for personal purpose. For example, you are working in a sales team. I am taking the same example once again. You are working in a sales team. So you need to go to the customer's location to meet the customer, get the orders. So you are traveling for which purpose? Official purpose. So you are getting a traveling allowance. It is of which nature? It is given for official purpose. It will fall into first category. Allowance given for official purpose. Now say for example, your employer says that every employee, we will give you some amount of money to every employee to meet the cost of education of their children. If your employer says to every employee, we will give them some amount of money every month to meet the cost of education of their children. Now this some amount of money, fixed amount of money, is nothing but an allowance only. But why this is given? Is it given for official purpose? No, it is given for personal purpose. Your children's education, why the employer should take care of your children's education? So, your children's education, if employer is giving you some amount of money to bear the cost of your children's education, then that is not official purpose, that is personal purpose. So, allowance can be given either for official purposes or for personal purposes. So, I have divided the allowance into two categories. Allowance given for official purpose, allowance given for personal purpose. This is classification of allowance. Then we have third point, taxability of allowance. Taxability of allowance means whether the allowance is taxable or not taxable. From the point of view of taxability, here also it is classification of allowance only, but the criteria of classification, in second point, criteria of classification was nature of allowance. In second point, allowance was classified into two categories based on nature of allowance. That is, purpose for which the allowance was given. Based on the purpose for which the allowance was given, the allowance was classified into two categories. Allowance given for official purpose and allowance given for personal purpose. Similarly, based on taxability, we can classify the allowance into three categories. Number one, fully taxable allowance. Fully taxable allowance. Fully taxable allowance means whatever amount is received from your employer, entire amount will be added to your salary, income and tax will be levied. That is called as fully taxable allowance. Second, we said is fully exempt allowance. Fully exempt allowance. What do you mean by fully exempt allowance? Fully exempt allowance means whatever amount is received from your employer, nothing will be added to your income. Nothing will be added to your income. It is exempt from tax. Tax will not be levied. Third is partly taxable and partly exempt allowance. Partly taxable and partly exempt allowance. Partly taxable and partly exempt allowance means whatever amount you have received from your employer as allowance, part of that amount will be added to your income and tax will be levied, and part of the amount tax will not be levied, part of the amount will be exempted from tax. Yes, have you understood this? So allowance means what? Fixed amount of money received by the employee from the employer every month along with the basic salary. Why the allowances are received? Either for meeting the official expenses or for meeting the personal expenses. From the point of view of taxability, allowance can be divided into three categories: fully taxable allowance, fully exempt allowance, and partly taxable, partly exempt allowance. Is that very, very clear? Yes or no? Now let's move on to third part. This is the flow chart in front of you. I'll start with right hand side, slowly and move on to left hand side. So first of all, we will discuss fully exempt allowance. In fully exempt allowance, if you recollect, first is not discussed. Third point is already discussed with you. Forget about that. Let me first move on to first point. Point A says daily allowance or constituency allowance received by MP MLA. Daily allowance or constituency allowance received by MP MLA. Do you understand that MP MLA are your representatives? They are public representatives. At the beginning of the chapter only I told you that amount received by MP MLA from the government is not taxable under income from salary because there is no employer-employee relationship between MP MLA and the government. But this, I am not talking about the remuneration received by the MP MLA from the government. What is this? This is daily allowance or constituency allowance. This is either daily allowance or constituency allowance. What do you mean by daily allowance or constituency allowance? Daily allowance or constituency allowance is received. Daily allowance or constituency allowance is received only for that many number of days for which MP and MLA, they are required to attend the parliament or state legislative assembly. Parliament is not functioning throughout the year. Out of 365 days, parliament may function maybe for maximum 60 days in a year. There will be a monsoon session of 7 days. Do you understand now? Parliament will function once in 3 months, once in 2 months, etc. So say for example, someone has fought the central government election from Chennai and he has won the election. So he will become a member of parliament. So whenever there is a parliamentary meetings now, he has to go to Delhi. From Chennai, he has to go to Delhi to attend the meetings. So he is going to incur a lot of cost. From Chennai to Delhi, he will go either by train or by flight. He will incur the traveling cost. There he will go and reside in some hotel. So he will incur the stay cost. Thereafter, he will also incur the food cost. So, government is going to pay them daily allowance or constituency allowance for those many number of days for which the parliament is in session. For those many number of days for which they are required to attend the parliament, government is going to give them fixed amount of money. See, remuneration they would receive every month. But whenever the parliament is in session, for every day they would receive some extra amount of money. That is called as daily allowance or constituency allowance. This daily allowance, constituency allowance is totally exempt from tax under section 10 clause 17. This daily allowance, constituency allowance is totally exempt from tax under section 10 clause 17. Dikshit, they are asking me questions, sir. Income is taxed under one head and claiming deduction in some other head. Is it possible? No, it is not possible. It is not possible. Your income is taxed under one head and you are claiming deduction in some other head. That is not possible. Yes, daily allowance, constituency allowance. Have you understood this? This is totally exempt from tax, fully exempt. See, government is going to make a law which is favoring them only. Therefore, government says daily allowance, constituency allowance received by MP, MLA, they are totally exempt from tax in section 10 clause 17. Because government believes that whatever amount we pay to them in the form of daily allowance, constituency allowance, entire amount is spent, nothing is saved. Nothing is saved, entire amount is spent by them. So there is no need to levy any tax. That is what government says. Number 2, allowance received by judges of High Court and Supreme Court. Dikshit, this is not deduction. This is exemption. First of all, this is not deduction, this is exemption. Deduction and exemption, they are something different. They are not same. Deduction and exemption are different. They are not same. Exemption means whatever amount you have received, if that income is exempt, then that amount will not be taken into your income only. Will not be added to your income at all. And deduction means that amount will be added to your income and subsequently it will be deducted as per the rules. That is deduction. And number two, this I am discussing along with the allowance topic because it is allowance only. That doesn't mean that it is belonging to the chapter of income from salary. While discussing section 15, I explained you employer-employee relationship and I told you that there is no employer-employee relationship between MP, MLA and the government. Therefore, amount received by MP, MLA from the government is taxable definitely under the head income from other sources, not under income from salary. So, similarly, this daily allowance also I am explaining so that you have a comparative idea. But since this is exempt, it is not taxable. This will not be taken into income at all. Correct? So, this is not deduction. This is exemption. Exemption means this amount of income will not be taken into your income at all. Is that very, very clear? Dixit? So, number 1, daily allowance or constituency allowance received by MP, MLA is exempt in section 10 clause 17. Next is allowance received by judges of High Court and Supreme Court. Allowance received by judges of High Court and Supreme Court. It is totally exempt from tax. No tax will be levied. And third point is, this you have already discussed. Can you recollect and tell me where this was discussed? Allowance received by government employee rendering services outside India is exempt in section 10 clause 7. Could you recollect this point? Do you remember? In the chapter of residential status and scope of total income, section 9, involving lot of theory was discussed. More than 50% of you might have dozed off. That point of time I discussed this. Salary paid by government of India to government employee rendering services outside India is deemed to accrue or arise in India But allowances and perquisites provided to such an employee outside India, they are not taxable, they are exempt from tax in section 10 clause 7. I had given you the reason for not taxing it. If we add this allowance and perquisites to his income and you levy the tax, then his monetary salary will not be sufficient to pay the amount of tax also. That is the reason government said that allowance and perquisite provided to such an employee are exempt from tax. Which allowance and perquisites? The allowances and perquisites which are provided outside India, they are exempt from tax. Is that very, very clear? So if you see this, if you observe which allowances are, to whom these allowances are exempt now, most of them are near and dear ones of government. Number 1, MP MLA, सेक्शन 10 क्लॉज 17, हिंदी में भी से 17 पे खतरा, हिंदी में भी से 17 पे खतरा. सो इट इज सेक्शन 10 क्लॉज 17, 17 पे खतरा. दिस पीपल आर खतरनाक लोग. So section 10 clause 17, near and dear ones of the government. So allowance received by MP MLA, daily allowance, constituency allowance is exempt from tax. Number 2, judges of High Court, Supreme Court. And number 3, government employee rendering services outside India. All these people are near and dear ones for the government. So their allowances are exempt. Is that very, very clear? Bye bye everyone.